Uh, yeah, friends, good afternoon. Are you there? Can I start the session, sir? You can put that in chat box. Yes, Jai Balan, sir. And it is going to be very important session and interesting session, because based on this only we are doing the audit. If you are very thorough with the LFAR, if you are thorough with the LFAR questionnaire, then you can almost do the audit. You can do the audit. And good afternoon to Bardish, Jitendra Patel, Harish sir, Hemant sir, Jayabalan sir, Sidhu, Sudhir Mandava. And I welcome everyone to the afternoon session. And I'm going to start. Does the system ensure that cash is maintained in effective joint custody of two or more officials as per the instruction of the controlling authorities of the bank? Here, previously, when we look into the system, that is a last year LFAR, you can find that no nil not applicable, yes. But after the new LFAR introduced, they say that all the points, all the reply to the questionnaires should be specific and clear. Why it is no, why it is not applicable. So hereafter, you are not supposed to do that type of reply. You forget about the last year auditor's report, but if there is any comment, you have to see to it and you have to do it. So here is a clear mention that a cash has to be maintained in joint custody. From where we can find this? For this, I have given one important thing, that is you have to verify with the cash, verify with the key movement register. You have to verify with the key movement register. So what is it? What is my key movement register? That means the cash key should be held in the joint custody of the two officers, either the cashier or officer, or manager or officer, or manager or cashier. So everything has to be recorded in the key movement register. So you have to ask for the key movement register. In that, you have to see who is holding the key for the entire year, who are the persons who are holding the entire keys, that is keys of the cash counter, vault, everything they should have, and everything has to be recorded in the key movement register. So you go and turn the page of key movement register. Both the officers or the cashier, they have to sign the key movement register. In case if anybody goes on leave, he has to hand over the key to other person. He has to hand over the keys to other person. If he has handed over the key to other person, then the same thing has to be signed and verified at the key. So it is your duty to see whether on all dates it is an audit objection. If the signature has not been found in the key movement register, it is an audit objection. It is an audit objection. You have to record the same in your audit report. So you have to turn all the pages of 365 days whether all the keys have been, key register is being updated. If it is not updated, you have to cover that point in your report. And I want to say one suggestion here: don't give instruction to the manager to fill the same, because it is an audit objection. So they are never cared to record the transaction in the key movement register. It is a violation of the head office norms. So if it is possible, you can give. Sometimes some additional guy, that is some guy from other branch, they will come and handle the key. And if anything goes wrong, and if there is no signature, then the person who was in charge of the keys are responsible. So it is your duty to see the key movement register. By looking into the key movement register, you can confirm that the cash is being maintained under the joint control. Here I want to ask, since I have touched the word key, how many sets of keys are there? How many sets of keys are there at the branch? How many sets of keys are there at the branch? You can put it in the chat box. How many keys are there? 2. That is, Jayabalan has said 2. Anything more than that? How many sets of keys are there? 2. That is, Jayabalan said, you are absolutely correct. And one branch, yeah, Harish, you are also absolutely correct. There are two keys. That is one key and another one is duplicate key. Next point that you have to see is these duplicate keys have to be kept at the other branch or at the other bank. This is one. For this, you have to see the letter of holding the keys by other branch. This is also one of the audit point that you have to see. One. And second is once in 6 months, they have to exchange the keys. They have to exchange the keys. This point also you have to see. And if the exchange is not done, that is also another audit point that you have to comment on this LFAR. Suppose if there is no specific column, don't worry at all. In the LFAR, there's a last para. Any other point that you wish to communicate to the management. In that, you can incorporate all your findings. So this is a key moment register is very, very important. There are two sets of keys. One key is available at the branch. And actually, it is not two sets of keys. I said one key is with the cashier, one key is with the manager. The same duplicate key, it is with the other branch. So it is two. Okay, it is two sets of keys. It is not two keys. It is not one key. That is one set holds two. That is one is with the cashier, one is with the manager. Two sets. So two sets of keys at the branch, two sets of keys at the other branch. In case if the other branch is not available, they can even keep the keys at the other banks also. For that, you have to see the acknowledgement. This is an audit. This is one of the audit point. You take note of it and you have to ask whenever you are going for the audit. This is with reference to key movement register. And next point is verify with the signature in cash stock register. So you have to ask for the cash stock register or cash vault register. In that, there after all the calculations, both the manager officer, they have to put the signature. If in all pages, this work you can give to your staff. In all the pages, if both the cashier and manager, they have signed the cash stock register, then you can give the certificate saying that yes, I confirm that the keys, that is cash, is being maintained in effective joint custody of two, and this I have taken from on verification of key movement register as well as the cash stock register. You have to give a specific reply. Previously, you can say that yes. By simply saying yes, the report is over. But since it is mandatory, you have to give a specific report. Yes, I am very much satisfied with the thing that it has to be kept under the joint custody of two officers. And I think Shanu sir, I think you have joined the session, and welcome Shanu sir. And you can unmute and say hello to all our friends, sir. Shanu sir. Shanu sir is from Europe. Is a very knowledgeable in bank audit area. Yes.
Welcome sir. Welcome.
Yeah. Now I am moving to the second point. Welcome, Mr. Shanu sir. Yeah. This is a very, very important area. Another point is very, very important area. Have the cash balance at the branch. So where you can buy the cash balance, you can verify the cash stock register. And ATMs have been checked at periodical intervals as per the procedure prescribed by the controlling authorities and the president authorities of the bank. Here, I want to tell, see, daily the officers, they are verifying it. And once in a month, based on the instruction given by the head office, the manager has to verify the cash on a surprise date. This point you have, this is also another audit point. This you can get from the cash stock register because this is specific. They say that whether the same has been checked properly at periodic intervals. This you can check from the cash stock register. One. And in that, manager has to sign, he has to verify the cash and he has to put his signature in the cash stock register. One. And once in 3 months, official from other branch, they will come to the branch and they will do the cash verification. For that also, they have to put the acknowledgement. For that also, they have to put the acknowledgement. That also you can you can get from the cash of register. And you have to see the gap of inspection. What is the gap? Even you can report that the cash is being verified on this date. You can give the list. It is being verified by the branch manager on the following date. It has been verified by the other officers on the date. So directly you have to give the report here. Next point is ATM. ATM. How to verify the cash? That is ATM cash. There is a ATM cash stock register that is available at the branch. You have to ask for the register, and the same has to be authenticated both the officers daily, and the manager as well as the officers, they are also supposed to verify the physical cash that is available at the ATM. They have to come and record the same thing in the ATM register, ATM cash stock register, and they have to give you a certificate, and they have to do the reconciliation if there is any difference between ATM register and ATM cash register, and as well as the physical cash balance. And here I want to tell one thing: the reconciliation of the work has to be done by the branch official. You are not supposed to do the reconciliation. So this point you have to bear in mind. Anywhere in the bank, you are not supposed to do the reconciliation. You are there to only to verify the reconciliation. So if there is any difference, you can ask the manager to do the reconciliation. It is their duty to reconcile and give. And if they refuse to give it, cool, you have to report. The reconciliation work has not been done by the branch manager. So I totally disagree with the ATM cash balance. You can give a bold report. This is what, whenever I go for audit, I'll give this report. If there is any difference, I'll give you a bold, I will give the bold report. Okay, I will not do it. I will not. Even nowadays, the banks, what they do with reference to jewel packets, jewels, they are seeing the jewel purity once in 3 months with actual stock. This is the latest introduction of the scheme. So you have to ask for the jewel loan verification certificate done by the other branch officials. Once in 3 months, they are verifying the jewel packets, jewel purity and jewel quantity. There is a separate thing, and the branch jewels have to be appraised by other bank, other branch appraiser. It's an important thing that you have to bear in mind. So this is also one of the audit points. What I am telling audit point is this area you have to verify. Audit point means this area you have to concentrate. You have to satisfy yourself. Then only you have to give the report. So this is what I want to say about the. If you have got any doubt, you can put it in the chat box.
Sir, one doubt, sir.
Yeah.
Sir, I have audited last year one branch. Sir, it has more than 11 ATMs, sir. It has so many areas, minimum 10 to 12 kilometers from the branch, sir. It has minimum take 2 days to complete all the ATM work, whether it is to be done or not.
Sir, regarding cash verification, I want to tell one thing. It is a test check basis based on which we have to do the statutory audit.
Okay.
You can say that since the branch has got 11 ATM, I have verified only this two ATM on test basis.
Okay, okay.
We are there to do only test check. We are not counting the 100% cash, sir.
Okay.
We are doing, see, statutory audit is a test check audit.
Okay.
And when in advances, they say that there is a limit beyond which you can do 100% audit, and
yes, sir,
you can do only 5% or 10% audit.
Yeah.
And key moment register, don't worry at all. Even they can have some 20 ATMs also. It is very difficult for you to go and do the ATM, but it is the duty of the auditor. He has to go regularly.
Okay, sir. Okay, thank you.
Don't worry at all, sir. Don't worry at all, sir. Because if it is 11 cases, you can go and do it.
Okay, sir. Okay.
Even it's a very, very good question that you have asked. So it is a test check basis based on which we have to do the audit. So any doubt with reference to this, then I am moving to point number C. That is, does the branch generally maintain and carry? I think whether my PPT is visible, sir? I think whether this PPT is visible to you?
Sir, yes, sir. Visible to all, sir.
Okay. Because sometimes I would have forgotten to share it. Then, okay, the question is C1, does the branch generally maintain or carry cash balance which varies significantly from the limits fixed by the controlling authorities? It is very, very simple. The limit fixed by the controlling authority. What that means, it is a retention limit. So every branch has got a retention limit. And if you ask for the retention limit letter, no branch manager, even according to my experience, 80% of the branches, they are not having the retention limit letter, but the managers say that, yes, we have got retention limit of 25 lakhs or 30 lakhs. And if the manager say that, sir, we are not having record of, any letter of retention limit, then you have to ask the manager to give it in writing. If you ask them to give it in writing, definitely they will get a letter from the regional office. Then they will produce the letter for your verification. And if they are not produced the same thing, then you have to same thing in your report and ask the manager to give it in writing. This one. And second one is they say that if it is 25 lakhs, any retention limit in excess of 25 lakhs, the branch has to submit a controlling return to the regional office once in a month. And the regional office, they have to ratify the retention limit. For that, whether there is any retention, when there is any ratification done, letter is being submitted to the or not, that you have to verify. So that is also one of the audit points. So you have to ask for the retention limit letter, and also you have to compare the retention limit letter, that is retention limit, with the actual daily cash balance. And if there is any difference between if there is any excess more than retention limit, the same has to be reported in your LFAR. This is one of the audit points. And point number C2, just the figure of the balance in the branch book in respect of cash with the ATMs tally with the amounts balances with the respective ATMs based on the year-end scores generated by the ATM. If there is any difference, the same should be maintained. So you have to go and see the ATM cash balance register, and you have to take the physical stock of ATM. Suppose as I said that there are 12 ATMs, it is very difficult for you to go and verify the 12 ATMs. And this one reconciliation, if there is any difference, the reconciliation work has to be done by the branch manager, and you have to verify only the reconciled statement. If the branch management is not, they are not able to do the reconciliation, don't worry at all. Give that point in your report. This is also another point. And also here you have to see, is there any complaint raised by the customer against the ATM functioning? There is a complaint register. So you have to call for the complaint register and see the date of rectification. Sometimes the cash, they say that cash is being debited, but cash has not come. They will inform the bank that cash has not come. They have to ratify the same thing and they have to reverse the entry. So you have to verify the complaint register also. This is a reply to the point number C2. Now I am moving to 1, that is in the cash. There is a third point. So far we have seen 1, 2, A, B, C. Now I am moving to the other point, D, whether the insurance cover is available or not. Insurance cover available with the branch adequately meets the requirement to cover the cash in hand and cash in transit. So you have to ask for the insurance cover letter, insurance cover copy. Most of the banks, they say that, sir, insurance is being taken care of at the head office level. It is not available at the branch. So if the manager say like that, you have to get a letter from the manager. This is also another audit point. So whatever I say as audit point, please kindly take note of it in your ledger, in your notebook, and whenever you are going for audit, you have to ask the manager. So insurance copy, if it is not available, then the manager has to give you a letter saying that the insurance is being taken care of at the head office level, since hence the policy is not produced for verification. If that policy is not produced for verification, then you have to give me a specific comment saying that the branch has not produced the insurance copy insurance cover to verify the policy. Hence, I am not able to offer any comments with reference to this point. Unless until you see the insurance policy, don't say that insurance policy is available at the head office. And you can give that insurance policy is available at the head office, but you have to be specific to mention that as I have not seen the insurance policy, I have nothing to give the comment for the transaction of 1D. You have to be specific. Okay, sir, this is with reference to cash. This is the 4 questions they have asked in the LFAR. We have seen in the morning, we have seen the methods of verification of cash. And now the specific question they asked in the LFAR. If you have got any doubt in this cash, you can ask here. Otherwise, I'll move to the next point. So insurance policy letter is a must one, sir. You have to ask. Your insurance policy letter is a must one, and you have to ask.
Sir, they are not giving any letter in this regard, sir. Whether we have put it, they have not given any letter in this regard in this LFAR itself.
No, you have to ask if the manager.
They are not giving, sir. It is the head office policy. It is maintained at head office. They are telling like only, sir, but they did not give any letter in this regard.
Yes, sir. Whatever they ask, whatever they tell you, ask them to put it in writing.
They did not give any writing, sir. I am putting in the letter. They are not given.
If they are not giving it in writing, you give the letter to them in writing and get a concurrent.
They are not giving letter also. That's a problem, sir.
Sir, if they are not giving the letter, then you make the same thing in your report saying that the manager has refused to give the letter.
They are telling what they are telling, sir. Please put like they did not give insurance cover the policy. That put it right like this. They are telling. That's a problem.
Yes, Shanmugam sir. If they say that yes, you can. If they are not able to give, they are not willing to give, and if they are not willing to make the commitment, to record the same thing in your report because you have to save your certificate. You have to be specific, sir. This see hereafter. I want to tell two cautions, and one I'll go for with fraud. One I'll go with fraud. And if there is any fraud, if it is undetected during the course of audit, then you are held personally responsible. This is one. And with reference to NP, also wrong classification or wrong classification also, and it also affected to violation. And if the member, if the branch has refused to give, then you have to be specific in your report. This is what wherever I go for audit, if I'll ask, and if they even if they refuse to give, then I'll record everything. So let them give it in, give the same thing in. We have to fulfill ourselves.
Okay, sir.
And that is why, and Shanmugam is here, and is my co-faculty.
Excuse me, sir. What we can do is, he can write an email to the manager to produce that. To produce the insurance cover.
We have to create the record.
Yeah, you create a record. Then you can. He cannot say that he has not said like that.
Then he has to give answer.
Yes.
And you have to be specific. It's a very good, Jayabalan said, that's a good suggestion. You can send the mail, and you have to commit to yourself. You have to make the manager to commit.
Yes, sir.
There is no commitment. You can say, I have sent the mail on such and such date. He has not answered. Not only for cash, sir, any item. Any item, if you want to get the clarification from the manager, you commit it in writing through mail. Okay, I'm moving to the next point. Balance with the RBI, SBA, and other banks. So you go and see the bank balance sheet. In that bank balance sheet, there's a second column. If you find any balance with the RBI, SBA, and other banks, you have to give you have to take the following observation, and you have to give a specific report. If the balance with in most of the branches, you will find this figure as nil. So if that is nil, don't worry at all. You have to put since there is no transaction, I am offering my comment as nil or not applicable. And the important thing is for branches with treasury operations, these entries are available. So if that is with treasury operation, that is any clearing members are there, everything will be coming in under this category. So the branches with treasury operation only, this entry will be there in the bank balance sheet. Where the balance confirmation certificate obtained in respect to outstanding balance as at the year end, and whether the aforesaid balances have been reconciled, the nature and extent of the difference should be reported. In case if you find any balance in the on the balance sheet, and you have to ask for the balance confirmation letter. Suppose if you are going audit for the IOB, for example, and IOB is having treasury operation with RBI and SBA or with other banks, and there is a balance available at the balance sheet, you have to ask the balance confirmation letter from RBI, SBA, other banks. And if there is any difference, you have to see that the balance has to be reconciled. Why there is a difference? This difference you must analyze. Normally, it will be in the form of bank charges, or sometimes State Bank of India or other banks, they offer interest to their One second, sir. Here, you have to get the balance confirmation, and normally the difference are due to the bank charges or interest credited into the account. So this is the nature of the transaction, and the manager, they have to reconcile, and it is your duty to verify. See, most of the auditors, what they are doing the reconciliation on their own. Don't do it. It is not your duty. It is, once again repeating, it is a duty of the branch. They have to do the reconciliation. If they fail to give the reconciliation work, don't worry at all. Since the reconciliation statement has not done by the branch, I have nothing to say anything about this. You have to be specific in your report. This is with reference to point number 2A. And get the balance confirmation from banks. This is the answer. Next one is compare the same with the bank. It is nothing but bank reconciliation statement. So this has to be done only by the branch manager. And now other points are observation on the reconciliation statement may be reported in the following manner. That is, cash transactions remaining unresponded. Here, I want to say that it's a fraud. It is one of the based on which a lot of frauds would have been taken. They say that we have sent the money to the chest branch. So that means there is a debit in favor of the chest branch. But when you get the statement from the chest branch, they say that no money has been received. So if there is any difference, so normally in 2 to 3 days, it will be reconciled. Today you are sent, the same has to be given credit in the chest branch. It will not be there. So there will be some difference. So you have to analyze for how many days the cash transactions remaining unresponded. Here I want to tell about the cash in transit importance. So whenever the bank send the money from its cash vault to chest branch, within same day the money has to be credited in the chest branch, and the cash should not be in transit after 6 p.m. because no insurance coverage is available after 6 p.m. So this is according to me. No insurance is available after 6 p.m. with reference to cash in transit. So as an auditor, you have to see if there is any debit in cash in transit, whether the same is being parked at the chest branch before 6 p.m. If it has been parked on the next day, you have to ask one question: in the night where the cash has been deposited. Normally, when they may deposit the cash in with other branches or with other banks also, for that they have to give the confirmation letter. This is the rule that you have to follow with reference to cash in transit. So it's a very, very important thing. So cash transaction remaining unresponded means they debit the cash in transit entry and they have taken the credit to somebody's account. Then after 2 days, it will be reversed. So the thing is, debit in cash and transit, the credit has to go only to the chest branch and not to any person's account. This account you have to verify. So this is a very, very important entry wherein a lot of frauds have taken place. Cash transactions remaining unresponded, and revenue items requiring adjustment. Revenue item in the form of bank charges or some other costs, say in the form of interest, or sometimes in the form of interest given to the bank also. That also will be there. And here I want to say about one of the state funds. The word I said that state fund, that means when there is a clearinghouse, all the banks, they are sending their collection to the clearinghouse. The clearinghouse, the rule of clearinghouse is if IOB is sending 10 lakhs worth of check, and if the IOB is getting 8 lakhs from other banks to make the payment, and net amount only the IOB has to pay to the clearinghouse, say 2 lakhs. 8 lakhs has to be paid by the IOB to clearinghouse. And some checks for collection, it has come to the tune of 8 lakhs. So that means the IOB liability is only 2 lakhs. If it is 20 crores, sometimes IOB is not having money. For example, in the clearinghouse. So what they do, they borrow the fund from other banks. Say if they borrow the fund, say Indian Bank, we'll take, for example, it is Indian Bank. They are taking money, loan of 20 crores from Indian Bank. and they will pay 1 day interest. For the utilization of Indian bank funds, IOB is paying the interest towards the utilization of IOB funds, utilization of Indian bank funds. For that, they pay you 1 day interest, and sometimes if there is any holiday, they pay them 2 days interest. With the logic that the amount has to be given credit to Indian bank on the next day itself. So this you can ask for the state fund transaction register. There is one register called state fund register, and 1 day interest only they are taking. Normally it is per lakh they are taking some 30 rupees or 40 rupees as interest. If it is for per lakh 30, for 1 crore it is 300. So 300 rupees 1 day interest they are paying, IOB is paying Indian bank, for example. And if the logic that the next day the fund has to go to the IOB. That is, IOB has to remit the fund to Indian bank. And in case if there is a delay of 2 days or 3 days, then the IOB has to pay additional 2 days interest. This is a revenue leakage area. It's a revenue leakage area. So you have to ask for the state fund register. If this is a clearing fund, this is also called as clearing fund sales. Clearing fund sales. For this, you have to ask for the state fund clearing register. If you go through it, definitely I can vouch. And most of the days, not most of the days, almost 50% of the days, there will be delay in remittance of money from one account to one bank to another account. So this is also another point you have to take note of. This is called as state fund transactions. And other credit and debit entries originated in the statements provided by RBI and other banks remaining unresponded for more than 15 days. It is a clear indication that this type of unresponded entries have to be reconciled within a period of 15 days. Within a period of 15 days, it has to be reconciled. This is also another important point. Then, where the branch maintains an account with RBI, the following additional matters. So, A 1, 2, 3 is the general matter. What is the additional matter is entries originating prior to, but communicated and recorded after the hearing in relation to the currency chest operation at the other branches involving deposits and withdrawal. That is, on 31st March, the entries have been emerged and it has been recorded after the year end. And you have to reconsider. So 31st March, you have sent the money. So if the money is being on the 2nd of the following month, yes, it is confirmed. In case 31st March, you have sent the cash, but if it is not recorded in the chest branch, even after 15 days, that is a serious matter. That point you have to report immediately. Then, in case any other matter deserves special attention of the management, the same may be reported. This is the thing what I said about the clearing fund sale. That is state fund lending. You have to go thoroughly and you have to report it. Next one is money at call and short notice. Normally, it will not be available at the branches where we are going for audit. But anyhow, we have to see the following points. That is investment made during the year. So it is nothing but it's a short-term lending, say for 7 days, 10 days. So investment, sometimes this branch is having some excess fund, they will go and make the deposit. So within short notice, so within 7 days you have to repay. So investment during the year, for that you have to get a, just like a bank deposit, you have to get a confirmation certificate from the other bank where this investment is made. In the balance sheet, you can find this column. You can find this column, and even I can say that there will be lot of adjustments here at the money at call and not short notice. Even at the year end, you will not find any transaction. Don't leave the entry as it is. You have to ask for the money at call and short notice register, and you see whether there is any money at call and short notice. You are where the debit goes, where the credit goes, that also you have to see. If there is any difference in the balance, you have to do the reconciliation. And you made an investment at the branch, so the other bank. So suppose if IOB is making deposit with Karur Vysya Bank, and Karur Vysya Bank in turn they have to make the interest payment to IOB. So this has to be properly recorded into the account. So this point also you have to see. And if there is no interest paid, and why it has not been paid, that inquiry you have to also make. And controlling authorities' instruction and guidelines to be followed. So that means any money that is being made at call and short notice, the controlling authorities' permission is required. And yes, they have to give a specific thing. So you have to record this and you have to give a specific notice that I have verified money at call and short notice. There is no transaction that has taken place in the entire year one. Or there are some transactions, because as at the year end, there are no transactions. But during the year, you will get a lot of transactions. If there are such transactions, then you have to give a report saying that I have verified money at call and short notice. All the interests have been properly accounted. And this point you have to give a specific thing. So this is another head which you have to verify as an auditor. Next one is investment for branches situated outside India. So you can do the investment within India. Suppose if you want to make the investment outside India, what are the items that you have to verify? That we have to see here. Purchase and sale of investment. So one thing, they use the word delegated powers. One. And the regional office or controlling authorities, they have to give instruction to the branch, to the foreign branch. So you can invest the deposit, you can invest the money with, say, American bank, other bank. So for this, the controlling authorities, they have to give direction. Okay, you are permitted to make the investment. Purchase means you have to go and invest. And sale means you have to withdraw. That is covered by the word purchase and sale of investments. And the delegated powers are clearly defined by the controlling authorities. Only after getting controlling authority permission, you have to make the investment. And when you want to withdraw also, you have to get the permission from the controlling authorities, because this has to be pulled back and put into the bank transactions. This point you have to do. And the foremost thing is the investment made at whether the investment is made on behalf of the branch or on behalf of the head office. Suppose the foreign bank, they made the investment at the the foreign banks on behalf of the branch, then the interest earned from that investment should go to the P&L account of the branch. You are certifying the true and fair view of the branch. If the investment is made on behalf of the branch at the foreign branch, okay. In case if the investment is made on behalf of the head office, then that interest belongs to the head office. Normally, what bankers they do, when they receive the interest of, they give credit to their P&L account. So thereby the profit will be boosted. So actually this profit has to go to the head office account and not to the branch account. So for this, if that is there, then you have to do the reversal entry by way of debiting the interest and giving credit to head office. So in investment, in whose name it is made. And for each and every investment, certificates are available. One manager can say that, sir, we made investment at American bank. Nah? Okay, it is permitted. You have to see the controlling authority letter. Yes, it is permitted. Where is the deposit receipt? Suppose if you are making your own deposit, you are supposed to receive the deposit receipt. Just like that, you have to verify, you have to get the certificate evidence from the other bank where the branch has made the deposit. And investments as per the RBI norms or laws of the foreign country are followed. Suppose if the bank is permitted to make the investment, then the investments have to be made as per the direction of RBI or the laws of the foreign country. If the laws of the foreign country permitted, then you can make the investment. If the laws of the country has not permitted the investment, then you will not be supposed to make the investment at the foreign country. And here you have to see two words, matured or overdue and not encashed. So deposit is matured, so you can withdraw. Okay, if it is matured and if you withdraw, everything is solved. And it is matured and overdue. Why you are not withdrawn? So that reason also you have to ask. If the deposit is matured and overdue, matured or overdue and not encashed, you have to analyze the reason. You have to get the reason from the branch manager and you have to give this. And this will be almost in, suppose we are going audit for the foreign branches, then these things that you have to see. So these are the 4 important points that we have seen: cash and cash, investment, cash, money at call and short notice, balance with the State Bank of India, and investment for branches situated outside India. So far we have seen these 4 points, and once again, I repeat, there should not be any no, nil, not applicable. Yes, you have to be specific in your report because it is made as mandatory. It is a mandatory thing that you have to give the report. Advances. This is a very, very important area wherein our fees is fixed. Here I want to tell one important thing. There is one column in the appointment letter. Your fees will be paid based on the advances as reported in the balance sheet. So I want to share my experience. One branch where I have gone for audit. At that time, there was no such instruction in the appointment letter. The branch has credited, that is, has debited suspense account to the tune of 3 crores, and they reversed the suspense account to advances on 1st of April. Since the branch has credited has made the entry in suspense account to the tune of 3 crores, my fees has already been reduced. So what I did, I made the MOC on 31st March and claimed the fees, treating that this is the advance. And at the time, there was no condition in the appointment letter. Then when I claimed this, then with a lot of fight, I got the excess fees. But from next year onwards, they have included this. RBI has modified this condition, and they have included one line saying that your fees will be paid based on the advances as stated in the balance sheet and not due to the MOC. So I'm the person who is responsible for this. And here they have come out with this new LFAR. They say that you have to fully verify the advances of 10% or more, aggregating of funded and non-funded advances, or 10 crore, whichever is less. You have to take only the outstanding balance. It is not the sanction limit. This doubt you will definitely get. You have to consider only the outstanding balance. So you go to the bank balance sheet and take the advance figure. You have to calculate total advances into 10% for outstanding. It is only outstanding balance, that is funded and non-funded, 10% of advances, or 10 crore, whichever is less. In case if the total funded and non-funded advance is 50 crores, 10% worked out to 5 crores, or 10 crore, whichever is less. That means any loan in excess of 5%, 5 crores, you have to do 100% working. 100% working. So you have to verify the full verification. This is a cutoff limit. So this is also another audit point you have to take. You have to take the full advance. Say if the advance figure is 90 crores, 10% works out to 9 crores or 10 crores, whichever is less. In case if the advance is 200 crores, let us say the advance is 200 crores, 10% works out to 20 crores. The circular says 20 crores or 10 crores, whichever is less. That means you have to verify 100% of 10 crores, more than 100% of 10 crores. All the advances, you have to do full verification. So this is a very, very important thing. This is a cutoff thing that you have to take note of is how much advances I have to verify. You have to verify this item of 10% or more. You have to consider only the outstanding limit and not the sanction. So you have to add both funded advance and non-funded advance. Normal and non-funded advance. What is the total non-fund guarantee given, LC given, that you have to take it. And if there is any invocation of guarantee, that comes under the category of funded. So till the non-funded accounts becomes funded, everything you have to take in the non-funded advance category. And there is in the advances column, you can easily find funded and non-funded figures. So this is a very, very important thing that you have to remember. Next point is you have to specific and special details have to be furnished, if any, and in addition. Suppose if you want to verify anything specific and anything you want to give special details, that also you have to furnish. Based on the audit, you can find this. Any other details require the attention of the management and the center. Here, only if it is material, you can test this point. And sometimes some advanced figures, some details will not be available in the LFAR. So those details you can incorporate in the last point of LFAR. So here, don't mention that water is not available. Don't mention that there are only 2 fans. The branch has to be air conditioned. That is not the way in which you have to give the report. So The detail means it is only in case of material thing that you can do it. I'll tell here one of the thing is appraiser appointment. We will take appraiser appointment. When you go and see the appraiser, the father has been appointed as the appraiser, but son is taking care of the appraiser work. So that is a very material thing, but there is no column here in LFAR. So the same thing you have to cover in the last point of LFAR, because the appraiser is the outsourcing person and not his son. So without any appointment letter, they are doing the appraising work. So you have to take immediate care, because there will be a lot of scope. There will be scope for a lot of frauds. So this is the immediate attention that you want to make during the audit. Now, other areas of audit is critical comments and test checks have to be reported. For critical comments means if you feel anything wrong, and if you want to criticize, suppose if the loans have been sanctioned based on the duplicate documents, based on something which are more critical, then you can do it. And some areas you have to do the test checking. And in test checking also, you have to give a specific report. What are the areas that I have test checked? So you have to give a separate report. And if there is any fault or if there is any fraud in your test check item, then you will be held responsible. So you have to be very, very careful. If you are doing test check also, you have to do 100% of all the test check. That means you have to verify all sanction letter, you have to verify the loan documents, you have to verify the charge creation, you have to verify the legal opinion, you have to verify the valuation. Everything that you have to do the 100%, even though you cannot by saying that I have test checked the document. Yes, you are permitted, but you have to do 100% of test check items. So this is another important thing that I want to convey. Next one is report is required for all your accounts verification. Almost working papers are required. This is a very additional work that they have given in the LFAR. What are the accounts that you have verified, what areas you have covered, and what percentage of files you have covered. This is the total advance, how many numbers of accounts you have verified. Everything will be there. So this is the list of accounts examined. It's a new format. Here they say that account number, account name. So that means you have to give the big list of account number, account name. So yeah, all the numbers you have to write. All the numbers you have to, that means it's a very tedious job. You cannot blindly say that I have test checked. Okay, you have test checked what are the items, what is the account number, what is the account name, and what is the balance that you have verified. And whether in that balance, what is the funded advance, what is the non-funded advance, and what is the total amount. So you have to, they say that it's a calculation, it is very easy, but you have to, whenever you verify the accounts, you have to take the list. So it's a very big list. Suppose in case we are verifying some 700 accounts, everything has to be incorporated here in the LFAR. So that means you have to maintain the proper working paper. So in this schedule, it is additional work. You can give this to the staff whenever they are verifying it. You have to do it. In case if you are verifying jewel accounts, you have to verify the jewel account number as well as the party's name and what is the outstanding, what is the non-funded advance, what is the total advance that you have to verify, and you have to do the percentage of examination. Normally, in case of any advances of 10% or 10 crores, whichever is less, you have to do the 100% verification. And if you are verifying less than that, please verify almost 10% of the accounts under the test check basis. So it should be, according to me, it should be more than 10%. If that is there, then that we can consider. It's only from my side I am telling. And normally one can say that I have test checked 5% of the advances. So this percentage of examination plays a very, very vital role. If time permits, even you can do 100% verifications also. So this is a new item that they have added in the new LFAR. And now we are going for the credit appraiser. This is a very, very important area. And you have to see whether the branch has complied with the procedures as laid down by the head office with reference to appraiser. And here, one can say that in the morning itself, we have seen the loan application is also a document. Loan application itself is a document. And the loan application has to be properly filled. What are the types of loan applications that the borrower has to make to the bank? For if it's a new customer, they'll submit the application. For the existing customer, they'll go for the renewal. And if the existing customer wants some additional amount, that will be called as enhancement. And some advances they are taking over from one bank to another bank. So for this 4 time, only loan applications are submitted. Next item is process note. Yes, here I'll tell the important thing. The party has submitted the application to the bank, and based on the application, along with the KYC, along with the income tax returns for 3 years, PAN card, Aadhaar card, and projected statement, CMA statement, encumbrance certificate, legal opinion, and valuation, the manager prepares the process note. The process note, it is in between the loan application, and after loan application, the manager has to process the loan. That is a recording procedure. So in that, the manager, he will explain whether he will tell whether he is a willful defaulter or fraudulent person or blacklisted customers. Everything he will tell in the process note. All this fraudulent person, blacklisted customers, and willful defaulters, all the details are available at the RBI site. This RBI site, you have got no access. It has to be accessed only by the bank. So everything has to be incorporated in the process note. Here I will tell another professional opportunity. Few banks, they already started to give this process note work to the chartered accountants as an outsourcing work. If you got any link with the officials, you may have got the chance to get this process work. Normally, they are paying you 5,000 to 20,000 for preparation of process note. This is also another additional professional opportunity available. You can contact it is not official work. Few bankers, they engage the help of the chartered accountants to prepare the process notes. I have received some process notes, and I have received a query how to get Bangladesh. You go to all Udupi banks. If any Udupi manager is bank manager is very close to you, you will get it. But officially, they will not give this work to you. Sometimes you have to go to the bank and help the customers. Suppose if you are submitting any
directly, sir. Or do we need to approach them directly, like bank manager?
What's that?
Do we need to approach them directly, sir? To the bank manager?
Yes. You have. See, you can go and ask the manager, is there anything that you are giving this work to chartered accountants? And Udupi area, you can get Bangladesh.
Yes, sir.
I think you are going for content audit, Bangladesh. In that content audit branch also, you can make a request. But in content audit, you cannot take any additional work. But if you are going for some other, you can take it.
Okay, sir.
Almost some 10 to 20% people, 10 to 20% bankers, they are giving this work as an outsourcing work. But it is an unauthorized work. But few managers feel that they want your opinion also. When you process the note, you will find some lot of irregularities that has to be recorded. So process notes is an additional work. Next thing is document appraisal. Morning we have seen the importance of documents. So loan documents have to be filled after the sanction of the loan. The manager has to prepare the documents as per the limit. If it is funded, non-funded, as per the limit, they have to get their separate document. This document we have seen in the morning. And quick mortality account within 12 months. This is what I want to tell here. And I cannot tell the bank. So here, if a manager has sanctioned the loan, within a period of 12 months, if that account has become NPA, then that is called as quick mortality. Here I want to share two experiences of mine. One is in the quick mortality. I've gone to one of the bank's regional office, and that regional manager is very close to me. I have seen one customer's account at the table, and I asked him, sir, why you encourage this customer? He is a failure party of other 3 banks, so don't encourage. But what they did, sir, only some 4 months back only we have sanctioned a loan to this party, sir. Now this party account has become NPA, and we have converted this under the concept called quick mortality. Suppose if you come earlier, we would have been caught. So we have been caught. This is one. And in one of the nationalized banks, where I gone for statutory audit, I found that the manager has filed. See, he has sanctioned a loan of some 12 loans. He has sanctioned to the tune of something around 22 lakhs. Something around 22 lakhs. It is all government sponsored scheme. He has sanctioned. Then after 4 months, within 4 months, what he did, the manager has filed a case, that is suit filed a case against all these 12 to 13 customers for the recovery. Yes, even he has not issued 13 to notice, or even he has not taken any basic steps under the SARFAESI. He has straight away filed a case before DRT by converting all these borrowings. And when I asked the regional officer, this is a tactics adopted by the manager to avoid NPA and to escape from the problems. The regional office said that, sir, we have given punishment to the manager by way of declining 2 increments. You know, the loan amount that runs into something around 45 to 60 lakhs. Even I think I don't remember the actual quantity. It will be around 45 to 60 lakhs. And they say that we have punished the manager to the tune of, by way of decrease of 2 increments. Then I said that is wrong, sir. Then I am going to classify this under the fraud. This I am going to classify under fraud. And one can say that, then immediately asked, once I received a letter from Ramachandra, sir, you can put it in, to anyone. So I'll try. I try to implement your suggestion, Ramachandra, and we'll see at the end. We'll see that we'll take the decision. And it's a quick mortality account. So here he has filed the case before court of law. That means he wanted to escape. If any case is pending before court of law, normally we will not go and probe it further. But I went further and probed the matter. I noticed that all the 12 to 13 customers are the relatives of the branch manager. They have received the money, and he has filed the case before court of law. And the rule says you don't question the cases. But I questioned the same, and I proved that there was no asset created. There was no such borrowers. See, only all the borrowers are relatives of the bank manager. Then I proved that it is equivalent to fraud. Now, when I reported this to bank head office, and they have taken steps. See, this report, this point I have covered in my audit report, and this report has gone to the head office. But this manager is very close to the regional office. He made some adjustments so that he has escaped from the mistakes. But when I highlighted this, then every officer who are from the regional office who has accommodated this guy are also suspended. Because why you are not taken steps? So this is the way in which you have to face the case. Quick mortality account, if there, don't leave it, you probe further. One can say that it is a normal thing, and this is a case that you can file before court of law. But filing the case before court of law, that is legal. But I proved that the sanction itself is a fraud. So recovery part is different. Since I proved the case as fraud, then the manager and others, they were suspended, and the case is still pending. So this is a very, very important thing. As an auditor, you have to see the quick mortality account in depth. This is what I want to tell to the fellow members. Next point is, so quick mortality is another additional point, another audit point. And feeding of interest rate and review of interest rate periodically. So whatever at the time of sanction, they say that prime lending rate plus 1%, prime lending rate plus 2%, they gave in the sanction letter. So this is the original figure they have fed into the computer system. But whenever there is change upward or downward, when there's a change upward or downward, the same thing, the branch has to do the effect in the system. For this, please ask for the interest run statement, interest run statement. That is also another statement is that you have to ask for the interest run statement and you have to see whether the interest rate changes have been given effect in the account or not. That you have to verify. This is possible with 100% only by the concurrent auditors. As a statutory auditor, you can do it at the test check basis. Feeding of interest rate and review of interest rate periodically. Another point is frequent renewal and rollover of short terms. So frequent renewal means the party has been sanctioned, say 10 lakhs. So I need another 1 lakh. So they renew. And I need another 1 lakh, they renew. That means frequent renewal. And they say that I need ad hoc sanction. So ad hoc sanction, say I need the fund for 90 days. I need the fund for 45 days. And after some time, the amount has come into the branch, into the account, and they close the short term. Normally, they say this type of frequent renewal or short-term loan, few banks say that only 2 times or 3 times. There is a limit for the frequent renewal. And if there is any frequent renewal and if there is any short-term availability, that means the party is in financial crisis. You can say that in future, this account may become NPA soon. This is a point you have to bear in mind. So you can do it. So frequent renewal and rollover of short-term loans, that is very, very important. And credit rating from RBI's approved credit rating agencies. Normally, if anybody borrowed money from the bank for the loan amount of 5 crores and above, they have to get the credit rating. There are internal credit rating and external credit rating. If the loan amount is below below 5 crores, the bank itself, they are doing the credit rating work based on which they are fixing the interest rate. So if any loan is below 5 crores and above 1 crore, you can find the credit rating work done by the bank's internal credit rating agency. In case if it exceeds 5 crores, in addition to the internal credit rating agencies, the external credit rating agencies, they also give the credit rating from the RBI. And this in case of cash credit loan renewal, it's a very big headache. Every year you have to get the credit rating agency. In case of term loan, you have to get only once. But if the borrower is the borrower is cash credit account borrower, then they have to get the credit rating from outside. Then the cost involved will be around 1 lakh, 1.25 lakhs. It's also additional burden to the borrower. But anyhow, as per the RBI directions, credit rating has to be obtained from the outside parties, and those credit agencies should be approved by the RBI. This is a basic thing that you have to remember. This is also another audit point. Sanction and disbursement. Sanction and disbursement. So here, loan application is submitted. Loan is being processed. Now the manager has sanctioned the loan. So for every sanction, all the terms and conditions have to be confirmed, have to be accepted by the borrower. Accepted by the borrower. In general, I'll tell there are 4 classes in the sanction letter. There are 4 classes in the sanction letter. That is, first portion is about the party, name of the party, address of the party, limit availed, whether it's a funded advance or non-funded advance. All the details you can get from the party. This first portion. Second portion is pre-sanction condition. Before release of the pre-disbursement condition, that is before release of the loan, the branch has to fulfill the following conditions. Everything will be there in the pre-condition. That means the party has to submit the balance sheet, has to close the temporary loan. Everything they will put it in the pre-condition disbursement. Third one is post-disbursement condition. After disbursing the loan, what are the conditions that the party has to pay? That will be stated in the sanction letter. This is called as third condition. And fourth condition is it is a general condition. It is a general condition. In that they will incorporate all the bank's circular, all the terms and conditions in the fourth condition, fourth para. So there are 4 parts wherein you can divide the circular, wherein you can divide the sanction letter. Here, now the loan is sanctioned. You are seeing the sanction letter. You as an auditor, you have to see whether the loan application is being sanctioned with the delegated powers or not. What is meant by delegated power? Delegated, see, bank is controlled by the board of directors. Board of directors, they have got direct control to sanction any amount of the loan. It is very difficult for the board of directors to sanction the loan. So then that means they are delegating the work, delegating the power sanction to their subordinates. So for that, they issue a delegated power circular. This point, this is audit point, you have to ask for delegated power register or delegated power circular or delegated power letter. That you have to ask from the branch manager. There you can see, you can find whether the loan is being sanctioned within the delegated powers given by the board of directors or not. If the limit has been sanctioned beyond the delegated powers, that point you have to be specific. Now, this delegated power depends on the status of the branch, status of the manager. Say there are scale 1 is called as assistant manager, scale 2 branch manager, scale 3 senior manager, scale 4 chief manager, scale 5 AGM, scale 6 DGM, scale 7 GM. So according to the status of the manager, the delegated powers have been transferred from the board of directors to the concerned scale. So here, if any loan is sanctioned, you as an auditor, you have to see whether the sanction is beyond the delegated powers or not. If you see those powers, then that point you have to report. Next one is loan disbursed without complying with the terms and conditions mentioned in the sanction letter. I already said there are 4 conditions. There is any violation to the point number 2 and 3. There is pre-disbursement condition, post-disbursement condition. Even to the last para, if there is any violation, any contradiction, then that has to be covered in your point. And this is a very good exercise for the concurrent auditor, because the concurrent auditors have to give certificate. That is one thing. The concurrent auditors have to give the certificate specifically that the party has fulfilled all the terms and conditions. There is no fee paid to the concurrent auditor. If the concurrent auditor felt that if there is any violation, then that has to be reported in the statutory audit as well as in the concurrent. And the loan given to companies to buy back securities, whether the auditor has to see, is there any loan given to the company to buy back securities? Because no loan should be sanctioned to buy back the securities. If that is there, then that has to be reported separately. This is what I want to say about the sanction. And if there is any doubt, you can ask up to now. This, I think I'm going very slowly, so that for each and every word I want to explain to you, so that in the audit, you will not get any doubt at all. Any doubt, you can put it in the chat box, or you can unmute yourself and you can call me. Okay, now I am going to see the documentation. This documentation portion, morning I have taken, and it is covered. One thing is loan release without of the document. So this is also I touched. So normally what the group, they say that, sir, you are my partner, he will be available only tomorrow. I will come and execute the document. Let him come and sign the document tomorrow or day after tomorrow. And that means it is an incomplete documentation. The manager has to release the documentation only after execution of all loan documents. But if any loan is released, on your verification, if you find the loans have been released without execution of the documents, it's a very serious matter that you have to cover in your report. It's a very, very serious matter that you have to cover in your audit report. Next one is deficiency in documentation. So we have seen what are the deficiencies. Normally the date, amount differs, figures differs, the borrower name differs, and the cut and paste of property due to cut and paste of the document. The other parties collateral security is included. In some cases, I found that MODTs also, memorandum of depositor titles, are also created for someone's property. See, you have given your property, so your property has to be, incorporated in the documents. But instead, when they did the cut and paste, other parties' property are subject to MODT. So these are the deficiencies. These are the deficiencies, major deficiencies that you have to see. See, any deficiency if it is there, then you have to report the same thing in your LFAR. And if it is a material nature, you can cover the same thing in the main report. In case if there is no title deed, but the bank, they have sanctioned the loan, then that is a material deficiency that you have to cover in the main report. registration of the charges. Non-registration of the charges means the charge is, suppose if anyone, any bankers, they sanction the loan, it has to be registered. That is, charge has to be created against the property. And if there is no charge against the ROC also, the same thing has to be reported. In the morning, we have dealt in detail, and just I'm touching it. And no guarantee is obtained in case there is any loan. The borrower is there, then the guarantor has to be obtained, but it is there in the sanction letter. But the manager has, without obtaining the guarantor's signature, guarantor document, he has released the loan. So that is a serious matter that has to be reported separately. And here, since I have seen the word guarantee, I want to tell very important thing, that the guarantors should be properly identified. The guarantor's KYC has to be verified. Guarantor KYC has to be verified. See, in one of the banks, one of the nationalized banks, I've gone for audit. I noticed that.
Sir, one question, sir.
Sir?
Sir, one question.
Yeah.
Sir, non-registration of charges, sir. Time gap for document registration, how much time, sir? Suppose today is 29th. Today they are giving loan. Tomorrow and day after tomorrow, most probably the bank are holidays. They do not do registration of charges. What will be the deficiency in this regard?
So as per if it is for non-companies, so within 30 days of lending the loan, MODT has to be created. But bankers, what they do, they first initiate the parties to create the MODT, then only they release the funds.
That is for a non-company party, sir.
Wait, sir. Morning, I think morning session, Sanmohan sir has not attended. I'll tell. For non-registration, within 30 days, you have to do the MODT. Even late registration of MODT is permitted with reference to non-corporate entities. With corporate entities, you have to register within 30 days from the date of execution of the document. And with the ratification or with the delay continuation, another 30 days are allowed. And beyond 30 days, it is not permitted. It is not permitted.
Okay, sir. Okay.
Telephone stand this all good. Correct. Even so, no, this is Salman sir, is it clear?
Thanks.
Yeah. So, Salman sir, you are master of charge creation, but you are testing. Thank you. Salman sir is very familiar in insolvency proceedings, and he is facing a lot of hit from various sides. And charges, I said, and no guarantee is obtained. In case there is any guarantee, and the guarantor has to be signed. With reference to guarantor, I want to tell one thing. It has happened in my case of audit. The loan, they say that son is getting a loan from a bank. The loan is being sanctioned to the son, and the property is in the name of his mother. Property is in the name of his mother. Right. Then the loan is being, loan documents have been executed. A mother has come and she has put the sign. Then after some time, that loan has become NPA. That is, after 2 years, that loan has become NPA. Then the manager has issued notice under section 13.2 to both the borrower as well as to the guarantor. Then on receipt of the notice, the guarantor has come to the branch, say that, sir, I have already lost the document before you sanction the loan. I have got a police complaint. And the manager got shocked because the borrower has produced a lady saying that she is my mother. This is what it has happened. Saying that she is my mother. And the photo is being affixed. And document, the manager has executed the document. The borrower has executed documents along with the guarantor. But the mother, the borrower says that she is my mother. And when probed further, they found that impersonation activities have been carried out by the borrower. So the guarantor has not been properly identified. The original owner, that is the real mother, has claimed that I have already made the complaint to the police and she has got the paper publication and she has filed a case against the bank. And even she has made the complaint to the police, and the police came and has requested the manager to return the document. So the case, it was pending, still it is pending before the court, and still the loan has not been recovered. So impersonation of the guarantor is also possible. So the manager has to exercise a proper care. Whether that lady is mother or not father, he has to see the actual evidence. And if the guarantor is someone, also the manager has to take proper care, and he has to he has to verify the KYC and everything. So this is a very important case I have faced in my life. And also another thing is loan against deposits without marking a loan. Nowadays it is not possible. If it is a manual system, it is possible. When sometimes even I heard that if the online lending also it is possible. If they create any lien against the deposit through online, the lien will not be created. So as an auditor, if you find any loan against the deposit, you have to see whether the original deposit receipt is the banker and the deposit receipt should be properly discharged, and you have to see whether the lien is being marked in the system, and the branch, they have to take the printout of the, these are the things that you have to see. They have to take the printout of the lien mark, and they have to file the same thing with the loan against deposit cases. So this is a procedure they have to see. And if there is any lien, if there is no lien marked, then as an auditor, you have to report it. In some cases, I found it's a loan against deposit. It has happened in manual system. For an individual deposit, for say monthly interest, they opened 2 pages of the same deposit. They paid monthly interest as well as the deposit closed in with interest. So it has also happened in past, but nowadays it is not possible because system takes care of everything. There is only one deposit, there is only one lien. Only thing is the party has to discharge the deposit receipt. That point you have to see. And review, monitoring and supervision. Here I want to ask one question. Review and renewal. What is the difference between review and renewal? You can put it in the chat box. What is the difference between review and renewal? You can put it in the chat box. What is the difference between review and renewal in loan? So review, monitoring and supervision. What is the difference between review and renewal? Review is just temporary. Yeah, Jaibalan sir. Then other members. Any different view other than this? Jaibalan sir said review is just temporary. We can tell review is for term loan and renewal is for cash credit loan. This is a basic difference. Review means you have to review the term loan. So every year you have to review the loan. You have to review the loan. That is term loan. Once if you sanction the term loan, it is applicable for 5 years. So every year the branch manager has to review the term loan account. Renewal means it's a cash credit loan. You have to do the cash credit loan every year you have to renew it. So review is different, renewal is different. And review and monitoring and supervision. Now everything now we are discussing in advanced area. This is a very major exercise that you have to do it. Periodic review of advances. So you have to review term loans every year. For the review of term loan, no processing charge will be levied. But if you are renewing the CC loan, processing charge you have to collect every year. Processing charge you have to collect every year. Next point is balance confirmation. So you have every year the bankers, they have to get the balance duly confirmed from the borrower. That means you have to see whether the branch has obtained the balance confirmation or not. Next point is AOD and oral. So I'll tell that DPN is valid for a period of 3 years from the date of execution. Before the end of 3 years, the manager has to obtain once again a pro note. That pro note is called as acknowledgement of debt or revival letter. Oral means revival letter. AOD means acknowledgement of debt. So that means from that date, the process starts once again. It goes for the 3 years. Morning, we have seen a very big list, and what is the life of the AOD and oral, or what is the life of the DPN? Morning, we have seen. So manager, that is the manager has to obtain the AOD and oral every year. And in case if the loan is due for renewal or review within what is the list 3 months pending, that is 3 to 6 months pending and over 6 months pending. Here I want to tell that the cash credit, that is term loan, has to be renewed before 3 months, and if it is overdue, then you have to give a specific report. And if there is no renewal also, it has to be given specifically in your LFAR. And if the review or renewal is more than 6 months, as per the IRAP norms, if the renewal is not done within a period of 180 days from the original due date, then that is called as NPA. So you have to be specific whether overdue is pending, overdue renewal is pending or not, that you have to give a specific point. Next one is major discrepancies. Suppose at the time of reviewing or monitoring and supervision, if there is any major discrepancies that according to you, if you found, then the same has to be recorded in this. So in that major discrepancies, when they review the term loan, and before reviewing the term loan, they have to go to the unit, they have to see whether asset is created or not. At the time of initial inspection, asset was created. After some time, the party has sold the assets to outside. It's a major discrepancy. So even at the time of review, the manager has to go to the spot and confirm that all the machineries are intact or not. If they sold, in one of my cases, the borrowers, what has happened, the borrower has sold all the machineries at higher rate than the purchase, but he has not repaid the loan. He has paid only the interest. And since the interest is being serviced regularly in the loan account, the manager has not gone for the inspection. Then the internal inspection team came and they went for the inspection and they found that there was no machinery at all. So it is a major discrepancy. Assets have been created, after that it was sold. So as an auditor, and particularly if you're a concurrent auditor, you have to go to the meeting, go to the unit at least once in 3 months. You have to cover all the units. You see, here I have got a very big opportunity in one of the private scheduled banks. They offered me concurrent audit to verify the unit and report it. All the loans above 5 crores and above. So in that region, so they say that, sir, we are ready to pay you 30,000 as fees. This is what they said. And when I went to the regional office and found that there are something around 400 loans are above 5 crores. 400 loans are above 5 crores. And they say that, sir, please submit the quarterly concurrent audit. So if it is 25,000 rupees, means 25,000 into 3, you will be getting 75,000 per quarter. Okay, that is the fees. The fees is very good. But they say that you have to verify 400 units every quarter. Is it possible? Because you are hardly, per month, you are hardly left with 20 days to work. So in 60 days, you have to audit 400 units. It is not possible. I refuse to do it because it is humanly not possible. And on my refusal, one CA from Salem, he has accepted the job and he has also come out. Now they say that, sir, we will increase the fees to 50,000. They say that it is humanly not possible. Sir, 400 units you cannot do. Later I said that it is not possible to be seen in once in 6 months also. So you have to go to only 1 unit per day and you have to analyze all the loan documents or everything. So that is also possible. That is also not possible. So when you accept the audit, you have to be very, very careful whether you have got the capacity to complete the audit. That also you have to see. In case of any major discrepancies, then you have to cover that point in your audit report in LFAR. And next item is stock statement. This stock statement details we will in detail when I said about the NPA. When I cover the NPA, which I plan to cover it tomorrow. In that, I'll go in depth with the stock statement and data statement that I'll cover later and not today. and other statements in the form of bank balance sheet, QS, everything that they have to submit as per the sanction letter. And drawing power calculation, this also I will take up with the stock and data statement while I address the NPA. It's a very major exercise, and you have to do it. You have to be very, very careful. And audited financial statements. So when you go and see the sanction letter, other conditions, they say that the audited financial statements have to be submitted to the bank before 31st December of the following, after 31st March, before December for the following month, they have to submit the audited financial statements. The same is not submitted before 31/12, then a penal interest at the rate of 1% will be levied on the borrowers. So audited financial statements, that you have to see whether the party has submitted the audited financial statements or not. Suppose if you are going audit for the year ending 31/3/2023, these statements will not be available for verification. So you have to give a specific note saying that audited financial statements for the year ending 31/3/2023 are not produced for verification. Hence, I have nothing to say that comment. I have nothing to say any comments on this. But as a concerned auditor, you have to give a specific report with reference to audited financial statements. And stock audit and related items, if there is any stock audit that is conducted and you have to ask for the stock audit statement, and you have to go through it, and if any adverse comment is made by the stock audit, then you have to give a specific report. And advance to non-corporate entities beyond the limits set by the bank. Suppose it is clearly stated in the delegated powers beyond the limit. So they say that in total, they say that this branch can sanction say 200 crores with reference to non-corporate entities. The branch, they are not supposed to go beyond beyond that 200 crores. For this, please ask the manager what is the limit fixed towards non-corporate entities by the head office. For that, the manager has to give reply. If he is not giving the reply, you have to cover the same thing in your report, saying that I have not received any reply with the branch manager with reference to non-corporate entities. And due diligence report in respect of consortium and multiple banking arrangements. Yeah, the manager, first the members, they must know that what is the difference between consortium advances and multiple banking. Unless until you know this difference, you will not be in a position to give reply to this point. Consortium means there are 4 banks jointly finance one particular route. Among these 4 points, say that what they do, they fix the limit, say 2,000 crores. One bank cannot give 2,000 crores individually. What they do, some 4 banks, they join together, and one bank can say that I'm ready to finance 700 crores, I'm ready to finance 600 crores. So the limit is being bifurcated and divided among the lending bankers. So the concept is 4 banks join, or 4 or 5 banks, they join together and they finance a particular project. Then that system of lending is called as consortium lending 1. And there is a leader for this consortium. So among the lending bankers, they choose the lending leader. And the leader has to follow all the transactions, all the circulars, all the transactions on behalf of the other banks also. And the consortium leader, he has to convene a meeting every month. And the consortium bank leader, he has to convey all the problems, all the transactions, and they have to discuss the thing with the consortium lending members. And if there is any enhancement, then the bankers, they have to sit together jointly, then only they have to take the decision. This will delay the loan process. This is one. And with reference to NPA, if one bank in consortium banking, if one bank account has become NPA, that will not spoil, that will not hit other banks' NPA classification. This is a basic point that you have to see. But now bankers, the borrowers are finding it very difficult to get a loan from the consortium. So initially they will get the loan. If they want to go for enhancement, it was a very difficult position for the bank borrowers. Now, multiple banking, customer is one, and various banks, they finance the customers individually. In consortium, they pull together and they finance. In multiple, all the bankers, they lend the money individually. So that comes under the category of multiple banking arrangement. So the bankers, they prefer, when borrowers, they prefer the multiple banking, because in case if they want any enhancement, they will go and get the enhancement. But here in multiple banking, the borrowers, they have to give individual collateral security. And sometimes two bankers, they accept the common collateral. For that, they will sit together and they decide. So this is the basic difference of consortium and multiple banking arrangement. Due diligence report means what is the real thing, what is really going on in that unit. They have to submit the thing to the auditor for the verification. This is the basic difference of between the consortium and lending. I have received a question from Ramachandra sir. Very good. But in the message, you kindly change the mailbox to everyone. So you have put direct message. That means this query is known only to me. How the interest income can be audited for consortium loans. So each and every bank, they have got their own system of interest. For each and every bank, they have to verify the interest. And the next question is, how can we audit the compliance process of for consortium loans? It's a very good question. And the thing is, there is a lead banker. The lead banker, he has to compile all the compliance procedures from all the banks together, and they have to prepare the consolidated statement. In that, you can see if you are going for State Bank of India audit, whether the state, what are the compliances the State Bank of India has followed. That you can see. If in other banks also, you can see. Ramchandra sir, you can change the mailbox to everyone. In that, you said to everyone. Everyone in meeting, you have to put. Please change it, because this is a very good question that you have raised. Yeah, I think Mr. Ramchandra sir, is it okay?
Sir, I am Shanmugam. Another question.
Sir.
Sir, consortium of loan for now, major loan, it is shared by the different banks. Okay.
Okay.
Mr. X borrows loan from Canara Bank 100 crores. And he also misleading some information, he borrows and the State Bank another 100 crores, totally 200 crores. Okay.
Okay.
But State Bank, he did not pay the money, that is going NPA, and he is a defaulter list.
Yes.
Now, what is the position of Canara Bank? He is paying correctly in Canara Bank, no, not NPA at all.
Okay, Sanu sir, you raised this question.
Yeah.
Yeah. Okay. Actually, with reference to consortium, if the State Bank felt that it is a fraudulent transaction or willful default transaction, other banks they have to follow, and everyone based on the decision taken in the lead bank meeting, they can recall the loan. They can.
Sir, it is not a consortium. It is separate. Sir.
So in multiple, that is in multiple banking, in multiple banking system, if there is one mistake has taken place, that will not affect other banks' decision.
Okay.
So this is the base thing. That is the difference between consortium and multiple banking. In consortium, one bank's what's that? One bank, if there is lead banker say that there is a fraud in the transaction, then all the banks, they have to recall the loan. And in multiple banking, it is individual bank's decision.
Because one in particular bank, he has so many advances, and in one is in NPA, all the accounts all will be treated as NPA.
No. In consortium, even in consortium, even in multiple banking, if one loan account has become NPA of a particular bank, that will not affect the other bank's NPA classification.
But they are giving letter to the particular bank, they are defaulted in our bank, please take care of
So it is a bank's decision, but the bank, according to Canara Bank, as you said, according to Canara Bank, if the account is not NPA, not classify that account as NPA, but the intention is to defraud one bank, and if the same thing is reported to RBI, if it comes in the list, then banks, they have to consider, if they felt, they can recall the loan.
That is default list there comes. That's the problem.
And if it is reported and if it is known to the other banks, they can recall the loan.
Oh, they can recall the loan only.
Yes, because one cannot finance the fraudulent companies.
Oh, that's one. So it is in a list, they can recall the loan.
Yes, they have to recall. They definitely recall.
Okay, sir. Thank you.
Okay, this is the difference between consortium and multiple banking. We are going for another thing. Lead bank details in case the branch is not the lead bank. Suppose if you are going to the audit and that branch is not a lead bank, then you have to ask for the lead bank details, then you can take the decision. And inspection or physical verification of securities charged to the bank. So as an auditor, that is concurrent auditor has to do the inspection or physical verification regularly of all the securities charged. In case if a house property is given as collateral security, it is a duty of the concurrent auditor to go and verify the securities. Even nowadays, in the stock audit, few banks they say that you please go and do the inspection of collateral securities also. But for the same fees, they are asking you to go and verify the collateral securities also. Anyhow, it is in terms of the appointment. And as an auditor, you have to do the inspection, physical verification of securities. What are the securities available? It is primary security and secondary security. Primary security is the security which is created out of loan given to the borrower. So that may be a capital asset, that may be a revenue, that is stock and creditors, stock and debtors. So that is called as primary security, the security which has been created out of the loans given. Collateral security is the personal property of the borrower, which is offered as security to the loan. That is called as collateral security. And both these primary security and collateral securities have to be inspected or physically verified by the auditor. And if there is any difference, that you have to report. And unauthorized overdrawing beyond the limit. See, normally the head office says, or the circular says, if the loan is 10 lakhs, up to the extent of say from 10 to 20% excess is allowed by the manager to the customer on a temporary basis. If it goes beyond that 20%, say if the loan amount is 10 lakhs, so 2 lakhs can be given excess. If the excess is given to the tune of say 30 lakhs, so 10 lakhs is a loan, the loan is excess is being given to the tune of 3 lakhs, that means it is overdrawing limit. That is more than the permitted limit the manager has given the loan. So it is called as unauthorized overdrawing beyond the limit. So this is also another audit point you have to see. And no insurance coverage. So it's a very, very important thing. With reference to insurance, what are the things that you have to see? That I'll tell. So insurance policy should be there. And in that, there is a life to the insurance policy. That is, up to when during your audit period, the insurance policy should not have been expired. The life should be there for the insurance. And the second thing is the amount of insurance. Next one is amount of insurance. Suppose if the loan amount is say 100 rupees, the insurance policy should be 133.33. That means the bankers normally what they do, they took the insurance only to the extent of loan amount given. It should not be the case. It is only 75% of the loan is 100 rupees. And what about 100%? It works out to 133.33 in case the insurance is taken or equivalent to the insurance loan amount, then that is called as underinsured loan, underinsured insurance policy. So it should be beyond, that is the policy should cover the margin money also. So that is called as 100% insured amount. Next one is bankers class should be there insurance in the insurance policy. And next important thing is the unit location. So where the unit is situated. In case normally what the common mistake is, the office is at one place, the production is at other place. Normally the insurance is taken only at the office address. That means the factory address is not covered. So it is called as, it is because you can clearly report that no insurance is taken for the stock which is laying at the factory. That means there is no insurance available. The insurance is available only to the office. So you have to see the address of the insured. This is a very, very important thing. Address of the insured one. And the purpose for which it is insured, whether it is for land and building or for stock. That also you have to see. This is a very, very important thing that you have to see with reference to insurance. So this is called as, if there is no insurance policy, then you can report separately. And if there is any underinsured, that also you have to report. And if the address of the unit has not been covered, that also you have to cover in the insurance coverage. If you got any doubt with the reference to insurance policy, you can ask, because it's a very, very important item. You have to give me a specific report for this insurance. And in one of the cases, I found that say one member from Delhi, one friend from Delhi member, she called and said, "Sir, the company has got the insurance, but suddenly there was a fire in the insurance, and all stocks gone, all the stocks have gone. The party has not submitted the stock statement, and the insurance policy is also pending. What I have to do?" I said, technically that account is being treated as NPA because no stock is being there, stock statement is not submitted, but insurance is pending. So this point you have to say clearly in your report and ask the branch to get waiver of submission of stock statement. This is one part. And here I asked her, see, what is the insurance coverage? Sir, the insurance is done to the tune of 5 crores and the loan amount is 5 crores, sir. Then what to do? Then I told her that it is called as underinsured policy. So for 500, for 5 crores, they have to take insurance for 6.67 crores. Since the insurance is done only for 5 crores, the insurance policy also they repaid the amount on pro rata basis, which is less than the loan amount. So to that extent, there is an underinsurance portion. So as an auditor, you have to see whether the insurance policy is done, is covered, including the margin. So this is a very, very important thing. And if you've got any doubt with reference to insurance policy, you can ask me, you can put it in the chat box. Okay, I can move to the next point. And even if you've got any doubt prior to this presentation, also you can ask. Next one is red flag account. It's a very, very dangerous item. It's a new item that the RBI has introduced in this concept. Red flag account report. That is, the concept was introduced by RBI to get the banks to act as an early warning signal, which includes raids by the regulatory and tax authorities. Once an account is red flag, banks are mandated to complete the forensic audit within 6 months and decide whether it's a fraudulent or not. So here the main condition is early warning signal. What is early warning signal? So the activities of the unit, that is all are covered. Some activities are covered by PMLA. That is Prevention of Money Laundering Act is there. If it is covered, that is an early warning signal. And next one is, if there is any raid conducted by the regulatory authority, say SEBI, some government, from some Forex department, they conducted the raid, or tax authorities, say income tax authorities or GST authorities, they conducted the raid at the unit. So the next, your audit program should include a point saying that whether there is any raid conducted at the unit or not. Tax authorities and any regulatory authorities, and is there any violation of the laws of the country. So this point you have to ask, you have to include as an audit point, audit program in your audit. So if that is there, the condition they say that when the raid was conducted, from the date of raid, within 6 months, the bank has to conduct the forensic audit. So that means our course of FAFD is very much important, because forensic audit has to be conducted by the FAFD, by the chartered accountants who have cleared that FAFD examination. So here it has to be conducted. It's a must one, and they have to say that the raid, that is the red flagged accounts, are not subject to fraud or not. So this is a very, very important thing. So forensic audit is very, very important in case if you identify one account as red flag account. The condition to treat a red flag account is there should be early warning signal. They say that which includes early warning signal means there will be some contrary to the transaction, some government banned items are being transacted in the accounts, and any income tax raid, any GST raid, or any raid conducted by Coffee Bosa, or any raid conducted by some central excise authorities, all are coming under the category of that is all are coming under the category to fix an account as red flag account. It's a very, very important thing. This point you have to cover in your LFAR. And comment on adverse features considered significant to top 5 standard large advances and which is this management. That means it's an indirect direction to the auditors. You are not supposed to see only the NPA accounts. You have to see the 5 top large advances. 5 top large advances. Even though it is standard, you have to do it. You have to do the audit. What is called as 5 top large advances? Then in that LFAR, we have seen 10% of the total funded and non-funded advances. 10% of the total and non-funded advances. You have to take top 5, and if it is standard, then you have to go through the accounts closely. And if there is any adverse features that you have noticed in that standard accounts, that you have to report it in your LFAR. Leasing finance activities. In case of if you are financed to leasing finance activities, you have to see whether the charge creation is there, insurance coverage is there, security inspection. Just like normal borrowers, you have to, the bankers, they have to do the verification. So this is covered under the leasing finance activities. And now this one, asset classification, provisioning, resolution of stressed assets. Here, this portion I will cover tomorrow and not today. As a branch identified NPA or not, and is the identification or as per the norms of the RBI. And for this, you will please go and read the circular dated 1/4/2022. 1/4/2022. You will please download the same thing at your home. Otherwise, if possible, after the completion of the session, I will send the circular to your mail ID. That is NPA circular issued by master circular issued by RBI. That is, this is the latest circular 1/4/2022, based on which you have to do all the IRAC working as well as the NPA working as well as the special mention account classifications. This I will discuss tomorrow, and what are the required changes incorporated in MOC also. This I am going to cover it tomorrow and not today. This portion I am going to skip it. And here there is one thing. List of the accounts in outstanding in SR 10 crores, whether it has been downgraded or upgraded, that also I will discuss tomorrow. Whether the RBI's IRAC norms have been followed. Is there any restructuring or replaced account during the control service, whether the same is being reported to that also. I am not going to touch it. This portion I am going to skip because the separate session, because it's a very important thing based on which you have to do the audit. And here legal action including recalling of advances initiated by the controlling authorities and not taken by the branch. That means if there is any loan and the head office says that you have to recall the same thing and the branch has not recalled the loan, and you have to recalling means you give back my money back. That procedure is called as recalling, and this has been directed by the head office and the branch has not followed the same thing, then the same has to be reported separately. And IBC is mandated, not initiated by the branch. As per the IBC norms, the procedures are compulsory, but the branch has not initiated the same. Then you have to ask for the reasons. So that means the company is a failure one, and you have to, as per the direction given by the head office, insolvency bankruptcy court procedures are mandated, but the branch has not initiated the same. For that also you have to give a specific. The IBC proceedings initiated, and what is the latest position? That is, the company, that is a bank, they already initiated IBC proceedings. What is the latest position? For that, you have to get a list from the insolvency professional, and you have to get the same thing updated in your report. And ECGC claims large export credit guarantee corporation claim lodged and rejected with reasons. So that means the export credit guarantee corporation means that is there is a every year the exporter, they have to make registration with ECG, Export Credit Guarantee Corporation. And if the policy is alive and the ECGC has approved the supply of the names of the supplier, and if the claim is made due to the default of the buyer, And if the claim is made by the borrower, and if the claim is not settled, you have to analyze why the claim has not been settled. That you have to get the reason from the ECGC corporation that has to be incorporated in your account. So you have to ask, is there any ECGC claim pending? And is there any ECGC being claim lodged and not paid? And is there any ECGC claim lodged and rejected? Everything that you have to report, you have to cover in your report and report it. The next one is NPA advances. Even in all NPA advances, as per the valuation report, there is it has to be valid once in 3 years. All the immovable properties which have been given as collateral security or primary security have to be, all the immovable properties have to be valid once in 3 years by the other engineer and not by the same engineer. Even if this rule is applicable to the NPA advances also. If there is any recovery policy, normally this compromise and settlement, I want to say here is, we are not seeing the loans closed during the year. This is what I want to say. We are not seeing the loans closed during the year. You have to see whether the loans closed during the year are according to the norms set by the head office. Sometimes the loans would have been closed due to some one-time settlement. And here, the very, very important thing is one-time settlement. You have to do it. One-time settlement, you have to do it on or before the date mentioned in the one-time settlement order. In case if there is any delay in the one-time settlement order, the bank may insist the borrower to pay the interest. One. And other, sometimes if the period has exceeded the one-time settlement order, then you can say that one-time settlement order is a null and void. And in spite of that, the bank has received the money and they settled it. And if the extension beyond the one-time settlement period, the branch has to get the concurrence from the higher authorities. Without getting the higher authorities' permission, the bank cannot or should not release the document. So we have to see all the loans closed during the year also you have to see. So what is the recovery policy? That you have to see. Give the list of advances where the return of or waiver exceed 50 lakhs. Here I want to share one important thing that is also related to one-time settlement and also the waiver. See, with the one-time settlement policy is, that is, if the branch has sanctioned the loan, the ratification, that is the one-time settlement order, has to be passed by the next authority and not by the same authority. Not by the same authority, and it has to be passed by the next authority. I mean, next authority only has to give the waiver. I have gone to a bank in Chennai, and I have entered into the bank, and I have noticed that something worth about some 17 crores, the manager himself has settled under the scheme one-time settlement. And as for the rule, the one-time settlement order has to be passed only by the regional office and not by the branch. When I discussed this, then the branch manager said that, sir, at the time of sanction of the loan, the loan is being sanctioned by the Scale 2 officer, that is branch manager. Now I am Scale 4 manager. So I have got the power to give the one-time settlement. This is what he has said. But the circular says, if the loan is being sanctioned by the branch manager, then the waiver, that is one-time settlement order, has to be executed only by the regional office. Then I called one person, sir, who is he? Then he said, sir, he is the branch manager. So here the branch manager is not according to the scale. Even though he is scale 1, scale 2, scale 3, scale 4, scale 5, he will be always called as branch manager. So if the loan is being sanctioned by the branch, then that is one-time settlement order has to be passed only by the regional office and not by the branch. So that means then I quoted that he has violated the head office circular and he has waived loan amount of some 70 lakhs. So it is against the head office norms. So that means I have given a list. Where the waiver exceeds the 50 lakhs. So you have to give the list of waiver which amount exceeds the 50 lakhs. It is per borrower. It is not a consolidated thing. It is per borrower. It is per borrower and not a consolidated limit. Next one is enforcing decreed advances and list of those advances. So normally most of the chartered accountants are not seeing the decreed advances, including me. Previously, I never seen that, and now for the last 15 years, I am seeing that. Decreed advances. What is meant by decreed advances? Decreed advances are those advances against which the court has already passed the order towards recovery. So this decreed advances, the recovery proceedings have to be initiated within a period of 12 years from the date of pronouncement of the order. If there is no amounts have been recovered or no proceedings have been initiated within this period of 12 years, then you have to give a reason why the proceedings have not been initiated. For this, you have to see the decreed advances order, and you have to get the concurrence from the advocate. That is from the advocate. That is those persons who appeared for the cases. What is the decreed advances? Even I went further to say that even the cases filed before court of law, what is the latest position? That also you have to get from the advocate. Recovery adjustments towards principal and interest on settlement. Suppose if the party has settled some amount, which amount has to be settled first, whether it's the principal or the interest. Normally, whenever the party has settled the amount, when they go for the one-time settlement, first they settle the principal. Only interest portion they are giving some waiver or adjustment. So normally when you make the payment, they give credit first to interest, then only to the principal. When the amount is being settled, some banks have got the policy that the amount has to go to the principal first. Whatever left, they adjust towards the interest. The remaining amount only they will write off. So the recovery adjustment principle also you have to see. And documents held at Central CPC, Central Processing Center Office, auditor has verified or not. See, whenever you are going for audit, here I want to tell, whenever you are going for audit, now recently, the trend is the loan is being centralized and the branch, they are just like acting as a post office. They are getting the documents, they are getting the loan files, and they are forwarding the files to the head office. They are forwarding the files to the head office or Central Processing Center. They process a loan, they release the sanction letter. Funds have been released by the branch based on the sanction letter. Even few banks, they say that they have given the credit to the bank concerned party's loan account, and only the cash transactions are carried at the branch. So all the loan documents have been executed at the Central Processing Center itself. So branch manager has got no power to sanction the loan. They have got the power only to forward the applications. Even they will not recommend the case also. So documents here, if you go to a branch and you say, the manager will say that, sir, all the loan documents, all the title deeds are at the centralized processing center. We are
1 minute, sir. One doubt, sir.
Sir,
Shanmugam, one doubt. Sorry, you are speaking Tamil.
Sir.
Sir, you are you told that. Sir, when I audited one branch, sir, that is a normal small branch. Maximum outstanding loan is 330 crore only. But all the documents for the loans kept other branch, it is situated more than 50 kilometers away from the particular branch. When I want to verify the documents, they did not give the document to the particular branch, our branch. But I have to go to the main branch of the particular branch so that I can get all the documents, everything. When we are doing statutory audit, it is unnecessarily we are wasting our times. Going to 50 kilometers a particular branch and getting all the documents. In this, what is the correct situation to deal with? Sir,
for that, the manager, they will give you a holding certificate. That is holding certificate will be issued by the other bank. One. And the branch should have got the Xerox copy of all the loan documents for its branch, and this should tally with the legal opinion. And if it is there here at the branch, you can give a specific letter saying that I have not seen the original title deed, as the title deeds are with the other branch. I have seen only the holding certificate issued by the other branch. So you can be specific in your report.
But now my situation, sir, that a particular branch did not have the Xerox copy. Only loan correspondence file only they are having. All the documents are kept in the main branch. It is more than 52 kilometers from the particular branch. So,
Okay, sir, if you got any doubt, you can go to the main branch and you, with the help of the judge,
sir, within
you can
3
go
to
and
4
do the
days,
audit.
sir, within 3 to 4 days, we got to complete the statutory audit. I have spent 1 day for the particular head office to get all the documents. That's why I'm telling time unnecessarily wasting. I'm telling.
So, okay, Salman sir, you can take one, you can give a qualified audit report saying that since the branch has not got any Xerox copy of the directed deed or other documents, I offer no comments. Even you can give a disclaimer report because since you felt that it is very difficult to go to the other bank to verify the document, since as per the rule, the holding certificate should be there at the head or at the branch, one, and the Xerox copy of the document should also be here, along with the legal opinion and valuation report. If it is not available, if it is not produced for verification, you can give a disclaimer report in your audit report.
Okay, sir. Thank you.
Opinion in your audit report. So don't waste time.
Okay.
Even if you go and verify and if everything is not
what happened, sir, when I visited at a particular branch, after informing that I am coming to take the following document, that the person who is keeping the document on the dead absent. So one day I have wasted my time for the 100 kilometer traveling. Next day only they have given. That's why I am telling.
Yes, sir. Suppose if you find no time and if no records are available at the branch, you can give a disclaimer opinion.
Okay, sir. Okay.
It is also permitted. So unless they produce the document, you will not be in a position to verify.
Even, sir, the COVID period, sir, I have audited Zoom meeting only, sir. And that I have never visited the particular branch. I did not take any documents, even journal verification, cash verification. I did not do, and I have given disclaimer open. They have accepted the bank head officers.
But you receive the fees.
Okay.
You receive the fees, Salman sir.
Yeah, they are given correctly, sir. That is no, sir. They are given, sir. Within correct time, within 2 months time, they are given. All
So,
three.
my suggestion to your query, you can issue disclaimer opinion.
Okay. Okay.
If there is any reports may not been produced, evidence have not been produced, including the there is no retention limit letter and no insurance policy. If you can give a disclaimer opinion. Sir. List of major deficiencies, list of major deficiencies, if any, that you can that you have to report. In case of major discrepancies in the credit review, monitoring and supervision, the loans have to be sanctioned. Let's see, in one of the cases, due to some court directions, the bankers, they sold a property. There was an NPA account in packing credit loan. The bankers, they sold the property and they have credited the amount to PCL, packing credit loan. But the court say that the bankers have got no right to sell the properties due to some legal dispute, and the court has directed the bank to repay the amount. Since the PCL has already been adjusted, what they did, they have issued fresh PCL without the borrower's signature, and they have converted everything into NPA within 2 days. So this is called as major deficiency. So it's a very big case that is still going on in our area, Karur area, and the fraud has run into the tune of 45 crores. Almost some 22 chartered accountants, they received notice from economic offence wing of Tamil Nadu police. So these are very, very, the auditors are in very dangerous position. So you have to identify the transaction correctly, whether it's a real NPA or not. Everything that you have to see. This point I'll talk to you tomorrow. And if there is any major discrepancies in the credit review, monitoring, supervision, that you have to give a specific report. And non-funded advances, what are called as non-funded advances? List of the borrowers with details of LC devolved and guarantees invoked during the year. So letter of credit, normally they issue for the the letter of credit they normally issue for the supplies, machinery supply, and they use it for mostly they use it at the time of import of machineries. One, and sometimes the LCs are also used whenever anyone supplied goods to the borrower. It is an indirect or equivalent to bank guarantee. In bank guarantee, there are two types of guarantees. One is financial guarantee and performance guarantee. Financial guarantee means the bankers are responsible to pay the amount in case if the borrower has failed to achieve the contract. That is directly about the finance. Suppose if there is any financial commitment, say to the tune of 1 lakh, and if the party has not fulfilled, then the banker, they will pay 1 lakh. This is called as financial guarantee. And performance guarantee, it is equal, almost the bankers, they issue at the time of guaranteeing the performance of the borrower. Suppose if there is a road contractor, they say that within 3 months, the road work has to be completed. If the road work has not been completed by the borrower within 3 months, then the bankers say that we will make the payment to the beneficiary, say state government or central government or anyone. In case if the state government felt that the borrower has not fulfilled the contract, then they surrender the guarantee to the bank to make the payment. This type of surrendering to get the payment, that is called as invoking. That means they are cancelling the bank guarantee and they are getting the money. So this, you have to give a specific report. For this, you have to ask for the bank guarantee register, and you have to see whether there is any invocation of bank guarantee during the year. If that is there, then that you have to give a separate list. And list of the borrowers where LC has been devolved or guarantees have been invoked but not paid. So the thing is, the bankers, they are issuing LC or bank guarantee based on the deposit or based on the immovable property. Now the guarantee is invoked, but the bank has not paid the amount. So you have to go and analyze the reason why the money has not been paid by the banker to the beneficiary. If the banker has paid the amount, that is the starting point for the funded advance. So till the bank guarantee or LC or invoked, that comes under the category of non-funded. In case if there is any invocation and the bankers, they paid the amount, then that is the starting period of funded advance. And here the guarantee is devolved or invoked, but the bank has not been paid. Why it has not been paid? And you have to submit the list of the borrowers for this. And list of instances where interchangeability between funded advance and non-funded advance was allowed subsequent to development of LC. That means there is a guarantee, the beneficiary has invoked, the bank has paid. So from non-fund to funded, it has gone. So what are the, you have to give a list of the customers where the non-funded advances have been converted into funded advance. Is it clear? If you got any doubt, you can ask. Because here the bankers, they issue the bank guarantee and LC. And the borrower has failed in his commitment. So the beneficiary, he has surrendered the bank guarantee to the bankers to make the payment. Here the beneficiary has surrendered and the payment has been made. One. And sometimes the guarantee has been invoked, but the payment has not been done. And in case if the guarantee has been surrendered or invoked and the payment has been done, and you have to give a separate list of the following customers that the funded advance have become non-funded advance have become funded advance. For that also you have to see. For this you have to ask for the LC register as well as for the bank guarantee register. And if you got any doubt, you can ask. Non-funded advance. It's a specific report that you have to give in LFAR. But they say that LC issued, not invoked. LC issued, not, guarantee issued, not invoked. Guarantee issued, invoked, but not paid. Guarantee issued, invoked, and amount paid. What are the eligible criteria and requirement to extend the bank guarantee to the customers? So it's a requisition letter, the banker, because first thing, when you want to extend the bank guarantee, the original bank guarantee has to be submitted to the banker for towards extension. Or you have to get a no objection letter from the beneficiary, and that no objection letter and with the request from the borrower, the bank guarantee can be extended. So without that, a bank guarantee cannot be extended to the customer. So Ramachandra sir, is it clear? Now, if you got any doubt till now, that is with reference to LC, that is non-funded advance, you can ask. Okay, I'm going to the next head of the LFAR. Suspense account and sundry assets. What are the items that you have to see? Expeditious clearance of suspense account. Suppose if any amount is being parked, if any amount is debited into the account, it has to be cleared immediately. Why the amount is being debited in suspense account, and that has to be reversed immediately. There is a delay of more than 15 days or sometimes 90 days. Even so, here they say that outstanding for more than 90 days, the amounts are still under suspension. Why you have kept the money under suspension? Has to be reversed. So outstanding for more than 90 days, if it is there, it has not been outstanding, it has not been reversed, you have to analyze the reason and you have to give a specific comment, and the managers will definitely tell a lot of stories, but don't hear the stories. You have to go with the evidence. You have to go with the evidence. So outstanding for more than 90 days, if it is there, you have to ask for the reason, then only you have to do it. Next one is whether recoverable or not, or return of CA has to give his opinion. So if any amount is debited in the suspense account, you have to see whether the money can be reversed, can be recovered or not. The chartered accountant who has gone for the statutory audit, he has to give you a specific report. This money cannot be recovered. This money can be recovered only subject to the following transactions, subject to the following evidence. Everything has to be clearly mentioned. So this is a specific report that a statutory auditor or content auditor has to give in his report. That is recoverable portion in the suspense account you have to see. Next one is test check of any usual items, or you want it lost. Suppose if there is any, you can do, you need not go and verify each and every entry, but if there are only 2 or 3 entries, you can do it. But if you happen to see some 700 entries in the suspense account, you can test check it and you can view whether the same can be recovered or not. So you have to test check any unusual items, any unusual items and your view on it. It is not usual items. You have to test check any unusual items and what about your view on it, that in case if those expenses are going to be lost, that also you have to give in your suspense account heads. And here, I want to say that one of my friend was got the entry in the suspense account, that is credit of something around some crores have come into the account. Immediately they have been transferred to the party's account. He has probed and he has reported under the fraud, and all this are subject to lot of things. So suddenly a huge amount of, say, let us take, it is 15 crores has come into the account and it has been debited from the account immediately to the various parties. When he probed further, he found that all are subject to, that is the head office is accommodating the fraudulent entries. So this has reported to RBI. So all the entries in suspense account, you have to do it very carefully. And sir, in support of this point, can you say anything? Suspense account.
Hello?
Sir?
No, nothing, sir. Go ahead, sir.
Hemant sir is giving reply for Shanmugam.
No, sir.
I asked Shanmugam and not Hemant.
Okay. Go ahead, sir. Go ahead.
Okay. I will go to the next item. Liabilities deposits. Dormant and inoperative deposits will be, you can see from the transactions. What is the difference between dormant and inoperative? A loan SBA account is there, and no transactions you have noticed in that account. So from the end of 1 year to another 1 year, it is called as dormant. After 1 year of that account is dormant, that will be transferred to inoperative account. This is the basic difference in dormant and inoperative deposits. So all those, if there is any transaction that has taken place in the dormant and inoperative accounts, that has to be ratified or approved by the branch manager. If there is no branch manager approval, and if there is any transaction in it, then that has to be reported separately. After balance sheet and any unusual large deposit movement, increase or decrease, here you can see suddenly there was a large deposit has come into the account and it has gone out of the bank immediately. So everything they will park in the deposit, liabilities deposit area. Here in the liability deposit area, there is an unutilized amount of say 2 crores into the account. The manager, in order to increase the advances, in order to increase the deposits, what they do, they transfer from CC to deposit. On 3rd April, they reverse the entry. This is called as window dressing. It is an objectionable area. It is a RBI violation area. There should not be any window dressing into the account. That is current from CC account, they are transferring to deposit account. They say to SB account. Within 3 days, they reverse the entry. That means you have boosted the advance, you have boosted the deposits. So this is called as window dressing, because without real transaction, the money has been parked and withdrawn. So this is called as there is unusual movement of the large deposits. And automatic renewal of FCNRB deposit, status of the depositor has to be reviewed. This is also another important area. Here, there is question that FCNRB, any deposit, now automatic renewal concept is there. It is a NRI deposit. It is kept at the FCNRB deposit. FCNR, it is not FNSCR, it is FCNR deposits. The status of the depositor, because FCNR deposits only NRI can hold. Suddenly, this NRI has come into the India and he has changed the status from NRI to resident. If the depositor has become resident depositor, then he has got no right to hold the FCNR deposits. So, in case of automatic renewal, the branch manager has to confirm whether the status of the NRI continues or not. For this, you have to ask the manager, if there is any FCNR deposit, have you confirmed the status of the depositor? Next item is minimum balance and levy charge. What is the minimum balance? In case of SB or current account, if the customer fails to maintain the minimum charge, say less than 500 rupees, then the bankers, they charge 100 rupees as the charges. And whether the charges have been passed by the banker or not, that point also you have to see. What are the other liabilities? That is in the form of bills payable and bills purchase and bills payable and sundry deposits pending for more than 1 year. If there is any entry that is pending for more than 1 year, you have to analyze why there is a sundry deposits which are pending for more than 1 year. You have to ask for the reason and you have to give the same thing in your report. Unusual items of withdrawal. Suppose suddenly from the last year sundry deposits, somebody has withdrawn the money. The withdrawal money for the specific purpose has been fulfilled or not. As an auditor, you have to see in case without any evidence, if any unusual items have been withdrawn, that point you have to give specifically in your report. And contingent liabilities, that is the liability may come or may not come. So that is called as contingent liability. So list of major items of contingent liabilities other than constant liabilities such as guarantees, LC acceptance not acknowledged by the branch. Here I will tell a very I can say very interesting case. In one of it has happened in my area. One of my customer, he has applied for a loan with that bank. Say the tune of say 25 lakhs. Say to the tune of 25 lakhs. He has submitted all the details along with the original title deed to the manager. And the manager has misplaced the original title. And he has misplaced all the loan files. And when the party has approached the banker, and the banker says that, sir, it will take time, this time, that time, and he has waited for more than 6 months. Later on, he has informed that, sir, I was not able to trace your original title deed. I was not able to trace your file. So I have misplaced. I don't know where it has gone. So suddenly this borrower has got annoyed because it is original title deed is the real thing. And the manager says that, sir, we will file a police complaint and we will give you a letter saying that we have lost the file, this and that. No. It is not possible. The property is worth about 5 crores. You have to give a police complaint and you have to give a certificate saying that you have lost the file due to your negligence and you have to pay me 5 crores for that liability. He has filed the case before court of law. If that is the case, that is also coming under the category of contingent liability. But the branch has filed a case against this point, and the court has decided in favor of the borrower and make the bank to pay rupees 2 crores, not 5 crores, to the party, and with the police complaint and acknowledging that the bankers, they lost the file. They went further. Now they went to the High Court now. So if that type of liability that is called coming under the category of contingent liability. Contingent liability is the liability may come or may not come. Those liabilities have not been acknowledged by the branch. That is, we are not responsible for the loss. So if those things are there, then you have to report the same thing, same point in your report. For that, please get a letter from the branch. And profit and loss account, you have to do, see the act, clearly they say that you have to test check the interest, commission, fee, etc. short. For this, I have got a separate session. It's a revenue item checking. That's a separate session here in my presentation. I'll cover later. So I've said I'll postpone this to the next, that is the NPI postponed to tomorrow. This after the session in the evening, that is after 7, that is I've got another session. We have got another session between 7 to 9. In that I will cover this portion, that is revenue leakage item. I'll take around 7 to 9. So don't miss that session. It is a very, very interesting session. How to identify the profit. What are the mistakes that bankers they are doing at the time of compiling the interest or not, that we will do it. And whether the branch has complied with income recognition, that point I will collect, until tomorrow. Next one is you have to do the test check of interest on deposit, whether it is excess or short. Whether it is excess or short, we'll cover in the revenue audit, revenue leakage area. And verify of estimating and providing interest accrued or on overdue deposit or mature deposit, unpaid, unclaimed term deposit, including in respect of deceased deposits. That also we'll see later. Then divergent trends in income and expenditure, get the data. What is called as divergent in income and expenditure? So last year you got a profit of 20 crores. This time you got a profit of 10 crores. So why there's a sudden increase in profit? So that means some advances have been recovered. So when advances have been recovered, automatically profit has come to less level. So you have to analyze why the profit has come down. You have to analyze why the expenditure has gone. So everything that you have to give in your report. So divergent trends in income and expenditure, you have to give the details. In general, what are the items that you have to see? Gold, bullion, and security items. So one, you have to see that bankers, they are not only selected bankers, they are giving loans. Only the selective bankers, they are giving loans towards gold and bullion, and not all bankers. Previously, the bankers, they sold the bullion to the customers, say some 100 grams, 50 grams, 10 grams. But nowadays, they are selling only 1 kg as minimum, and that too, that is a metal sale. That is a gold metal sale, and the minimum quantity is 1 kg. And now I found that in my area in Salem, State Bank of India, they are selling this bullion. That is, 1 kg is minimum. You can go and buy it. And I asked them, sir, can you give a loan to buy this bullion? They say that, okay, sir, we are ready to give loan to buy the bullion. Then they say that, but you have to give us security. I said, sir, can you take the bullion as gold or bullion as security? Then can you give the money? So I'm ready to pay 35% of the value of the gold, can you take the gold itself as security? He said there is no such scheme available at the bank. I think previously they say that if you convert the gold jewelry you can get the gold loan, but there is no loan available to buy the bullion. If at all you want to buy the bullion, you have to offer additional security. So here, does the system ensure that the gold and bullion, it should be just like cash, it has to be kept under the joint custody of 2 or more officials as per the instruction. Just like cash stock register, there is a gold stock register. You have to verify and go and see the bullion stock register, and you have to see whether the same rule which are applicable for the cash, you have to follow the same thing. It should be kept under joint custody. And does the branch maintain adequate records of a receipt, issues, and balance of gold bullion updated regularly? So this you can find from the bullion stock register. So what is the opening balance? Whether any new gold has come, whether new stock has come, whether you have sold the stock, and what is the balance? The balance, it must, if you go and verify the balance of bullion, it must tally with the balance that is stated in the bullion stock register. So these are whether everything is maintained properly or not, that point you have to see. Does the periodic verification, just like cash, the gold and bullion stocks should be verified, and if there is any excess or short, the same thing has to be reported to the controlling authorities. Another points are, does the system of bank ensure that adequate internal control over the issue of custody of securities items, term deposit receipt, draft, pay order, checkbooks, traveler's check, gift check, etc. Here I want to share another experience which I have got in my life. So I went for this statutory audit. I found I went to the securities, that is, I have checked the unissued DD. I have checked the unissued DD. If there is any unissued DD, it should be intact. So when I saw on one of the DD bundle, I have saw something, there is a fold in it. There is a fold. That is, some gap is there. Some gap is there. Then I have taken that DD bundle, DD book, and when I turned the page, when I turned the book, I found that one leaf, it was missing. One leaf, it was missing. That means somebody has tagged the DD leaf and they have issued the DD. And when we probed, I sat with the manager, and he sent a message to the head office from where this DD has been encashed. They found that the same DD was encashed at Bangalore. The bank is at Salem. So I found this type of fraud, and they found that there was a DD encashment of 80,000 rupees, and the DD signature is being forged by one of the officers. And later on, the branch, they have conducted the inquiry, and they found that assistant manager, he has encashed unissued DD, and he has encashed 80,000 rupees for his family maintenance because he was in debts problem. So he has encashed. Now he has lost the job because he has misused his powers. So he has also lost the job. So it is your duty to verify whether all the unissued items are intact or not. So DD, pay order, checkbook, TC, gift check, and everything should be checked properly. And next one is whether the system is being followed by the branch. Have you come across any missing or loss of the item, many lost items? So you have to see whether the branch is taking care. And in case if it is coming in a bundle, you need not open. Suppose if something is open and you have to see the loose stationery also, the loose stationery should also be properly recorded in the stock register. And what is the system followed by the branch, that you have to inquire, you have to satisfy yourself, then only you have to give the report. Now I am going for the books and records. Whether there is any software or system, manual or otherwise, used at the branch, which are not integrated with CBS, and if yes, give details thereof. And in case the branch has been subject to information system audit, and whether there are any adverse features reported, for this you have to call for the information system audit report. And if the IS auditor, that is the person who has qualified ISA, now they will be given the job of IS audit. So if there is any such audit and if the auditor has given any adverse report, that you have to see, and if those adverse reports are still pending, and that point you have to see. Next item is whether the branch is generating and verifying exception report at periodically as per. See, exception report, the bankers, they are preparing daily, and the manager has to verify those exception reports and he has to put the signature in the exception report. You can see those entries that have been passed by mistake, or somebody has modified the original transaction. Everything will be coming under the category of exception report, and the exception report has to be approved by the branch manager. And whether the system of bank warrants expeditious compliance of daily exception report, and whether there are any major observations pending such compliances at the year end. So in expeditious daily exception report, the manager has to go, and if there is anything that needs immediate attention, and the same thing has to be set right immediately, and if it is not set right, then the same thing you have to report, you have to cover in your LFAR report. And other items are whether the bank has laid down the procedures of manual intervention to system generated data and proper authentication of the related transactions arising from along with the proper audit trail of the manual intervention. Sometimes now it is a CBS environment. All the transactions are being carried out as per the system. In case there is any manual interpretation, I will tell one very important thing. The system will ask whether the stock statement has been submitted by the party or not. The system, if they put no, then the system will charge penal interest till the same thing is being regularized. Here, the manager, what they do, or officers, what they do, they pass the entry, say that the stock statements are filed in time, but originally no stock statement has come. So they manually enter into the system and they modified the figures. One. And another thing is one of the NPA games which I want to tell tomorrow. They change the master records. They change the master records in such a manner that NPA will not come. That detail I will take it. I will tell tomorrow. And here, if there is any change in the master record, first initially you have to fed the master record manually. After that, the system will take care of everything. In case if you want to change the master record, then you have to get the permission from the controlling authorities. Then only you can change the master records. But without any master record permission, if the branch manager did anything wrong, any change, that has to be reported by the charter accountant in his audit. Furnish your comments on data integrity, that is including data entry, checking correctness and integrity of the data, no back-ended strategies, which is used for MIS at head office and central office level. So it is only our observation because you have got now direct control over the data integrity, because anyone can do the data integrity. Here I want to tell one important thing. The bankers, they change they manipulate the data and they change the due date from this year to next year. So that means the system, it will not do the NPA. Okay. When I inquired with the branch manager said that, sir, I have got no direct control to change the system, but somebody at the IT department, they change the due date from this year to next year. So that NPA classification, they did it, wrongly, because all the NPA accounts will be classified as standard because of this reason. So this comment you can observe and you can give, but the effect in the head office level, you will not be in a position to report it. And inter-branch. So between you and between the branches, if there is any inter-branch accounts, that has to be recorded. So here, NEFT, DD issued, everything will be here. This has to be rectified only by the head office and not at the branch level. Does the branch expeditiously comply with the responding communications from the designated cell and head office as regards the unmatched transactions? Sometimes the head office may issue a letter to the branch, say that these entries have not been matched. So for this, you have to ask for the details from the branch. If the manager, furnish those details, you have to go through it very carefully. And if there is any unmatched transactions which are pending for more than 6 months, that you have to cover in your report. And as at the year end, there are any unresponded or uncompiled queries or communications beyond 7 days. Case the head office has sent a letter and the branch has not communicated the details to the head office, then if it was pending for more than 7 days, that point you have to give specifically here. These are the specific things that you have to do it in your audit. Here, this is a very, very interesting area, fraud. Here I'm going to cover the fraud in a separate presentation, but since it has come here, I just touched the fraud here. And I got a query from Ravindran sir. Could you please explain voucher verification report? Voucher verification, okay. Ravindran, voucher verification, voucher in concurrent audit, you have to do 100% voucher verification. But in statutory audit, you have to do the test check of verification. But for this, you have to get the day-end report. In that day-end report, all the vouchers have been recorded. You are having the vouchers. You have to tick all the vouchers, and you have to see that all the vouchers have been passed by the officers, and you have to see that all the vouchers have got recorded. And that we can say that all the entries that you have found in the day-end report has got the equivalent vouchers, and these vouchers have to be bundled properly and have to be verified by the officers. If there is any omission of vouchers, then the same thing has to be reported by the officer. And this is possible only in concurrent audit. It is not possible in statutory audit. This is what I want to say about the voucher verification report. In statutory audit, that is, you need not verify about you will not give about the voucher verification report. Voucher verification report you have to give only in concurrent audit and not in the statutory audit. With reference to frauds, fraud detected, classified, but confirmation of reporting the RBI not available on record at the branch. Frauds detected and classified as fraud, but the same thing is reported to the same thing is reported to RBI, but that record is not available. So you have to ask for the fraud register first. You have to ask for the fraud register, and you have to classify whether the fraud is detected during the course of audit and it is being confirmed as fraud, reported to RBI, and the details of those details are not available at the branch. One. Second one is whether any suspected or likely fraud cases are reported by the branch to the higher authorities during the year. If the branch has found any fraud, the same thing they have to report to the controlling authorities. And what is the procedure? What is the latest position? That you have to take note of it. First thing, fraud detected and reported to RBI, reports are not available. Second thing is fraud detected by the branch, reported to the head office or controlling authorities. What about the latest position? That you have to see. That is fraud. And this is a major thing. This is all these things you have to see. In respect of fraud, based on your overall observation, please provide your comments on the potential risk areas which might lead to perpetration of fraud. That is falsification of funds, false representation by the borrower, that is by giving wrong information, and misappropriation of funds, especially through related parties, shell company transactions, forgery, fabrication of financial statements like invoices. Sometimes to avoid the GST, what they do, they prepare a dummy voucher and they got the money. The payment has directly go to the borrower, to the supplier, but this borrower has fabricated the invoice and the money. Then he will see that money has to go to that company. Thereby, they are taking the money. They are avoiding GST also. So, any fabrication of invoices, debtor list, stock statement, trade credit documents, shipping bills, work orders, and encumbrance certificate, and avail the credit. See, in one of I will tell about the encumbrance certificate. So, the few customers, they will go to the registrar office. They manipulate the encumbrance certificate with the help of the customer of the sub-registrar office. It is also possible. And whether they avail the loan or not. Nowadays, they say that they manipulate the GST returns also. So that is also a fraud. Any manipulation done to the government records, it amounts to fraud. And even one can say that for bank, they are giving one statement. For income tax, they are giving one statement. For GST, they are giving one statement. It also amounts to fraud. So lot of frauds are available. So as an auditor, you have to see the genuineness of the transaction. Use of current accounts outside the consortium where trust and retention account is maintained to divert the funds. List of debtors, creditors were being fabricated, receivables were not followed up, or return of debt related parties, fake export bill, shipping bill, that is all Havala transactions, and overstatement of invoice amount, stock statement, shipping bills, turnover, fly-by-night operations, including the cases where the vendors, related associate parties, manufacturers are not available on the register office. That means they are producing the dummy vouchers. And if you nowadays bankers, what they are doing, if you produce any quotation, bankers, they are going to the spot of the person who has given the invoice. And they have to satisfy themselves that it is a genuine party. Then only they are allowing the invoice to be passed. So these are the areas where RBI clearly said that these are all the fraudulent areas wherein the auditors, they have to give a specific report. That means you have to say that there is no shell company, and you have to say that there is no misappropriation of funds done through the related parties, and you have to see that there is no forgery and financial fabrication of the finance statements, and you have to see that the auditor has to specifically give a certificate saying that the invoices are genuine, the list data are genuine, stock statement produced by the party are genuine. So these are the overall burden. Now they have passed on to the charter accounts. It's a very big area. Here I want to tell another important definition of one thing, and I will complete this fourth point and tell to the definition of fraud. Whether the system of early warning framework is working properly and is required early warning signal from the basis of our classifying an account as red flag account. We have seen what is red flag account, that is early warning signal or a raid conducted by the tax authorities. And if that is that, you have to conduct the forensic audit. So as per the RBI definition, I want to tell one thing. If any fraud is undetected during the course of audit, then the auditor is held personally responsible for the loss to the bank, apart from facing our institute action, regulatory action, etc., etc. So they say that if there is any fraud, and if you fail to identify the fraud, then your personal property will be attached. So this is a very, very dangerous section. So you are not supposed to take up the audit very casually. You have to do it. And general from with others is KYC implementation, whether the branch has followed the KYC implementation and management information system. And what are the miscellaneous items are, in framing your audit work, LFAR, have you considered any major adverse comments arising out of the latest report, such as, you have to see, that means indirectly they are forcing you to verify the previous branch auditor's report and LFAR. So what is there any comment against the previous audit report? And few chartered accountants who have gone to the audit, after I did the statutory audit, they called me and said, sir, you have made a lot of comments in the audit report, and you forced us to work, and you have forced us to give nil report. That means whether your report is being complied by has been rectified by the branch or not, you are forcing us to do the work. So you have increased our workload. Then some auditors, they say that it is very difficult for us to rectify those things, but anyhow, there is no other go. We have to give a nil report. So we have verified everything, and few things still the branch has not fulfilled. So you have to verify the previous year auditor's report, and internal audit, staff audit, concurrent audit reports, and credit audit report, and stock audit report, credit audit report, stock audit report, everything that I will cover in other area of presentation, and RBI inspection report if such inspection took place. So you can ask all this register, all these reports, and even before going to the branch, you can write to the manager, sir, please keep ready of the following reports, because we have got only less time. So please kept it ready for our verification. And income and expenditure account revenue audit, please go through it. Please go through it. Don't omit any such report. And particularly if it is a concurrent audit report, please try to go at least at very rapid speed with reference to concurrent audit, because concurrent auditors are called as early warning signal person. So they will give a detailed report. So you have to go through those reports. And IS, that is information system audit, IT audit, computer and system audit, And all those reports you have to see. And if there is any special inspection or investigation report, if there is any, see, you have to give a letter and you have to ask the manager to produce all those reports. Based on that only you have to take decision. So this is a very, very important area that you have to ask this you have to give a specific report under the column called miscellaneous. Are there any other matters which the branch auditor would like to bring to the notice of the management or the statutory auditor? This is a very, another thing, whatever things that you are not able to locate in the other paragraphs, you can fix everything here. You can give those reports here. So this is coming under the category of miscellaneous. And this is also another thing, Annexure 3 that you have to see. I'll change the slide to go to Annexure 3. It's a long form audit report for large, irregular and critical advances. There's a special additional report that is available, applicable to the special branches. That just wait, I'll go to that area and come back. Just hold on and just got these. Tomorrow I'll share that NPA with reference to Annexure 3. In that it's a specific thing, and otherwise just hold on. I'll take that my thing. Just give me 2 minutes time. Think is this visible by you, sir? Annexure 3, are you able to see this? Are you able to see this annexure? Yes, thank you. So Annexure 3, that is long form audit report, which has which is there for the large advances. It has to be obtained by the branch auditors from the branches. So that means you need not worry about this. The manager, they have to fill it and you have to verify it. So it is not your duty to fill it. So this point you have to bear in mind. This Annexure 3, this has to be obtained by the branch auditor from the branches dealing in large advances. That means you need not worry at all. You need not fill this. Name of the borrower, address, nature of activity, total exposure. You can see this as a corresponding sanction letter. It's a corresponding sanction letter. It is almost equivalent to corresponding sanction letter. What is funded advance? What is non-funded advance? Who is the name of the proprietor? Is there any chief executive? And asset classification. This is with reference to NPA. As on the date of current audit, as on the date of previous audit. If the previous audit say that it is substandard, then this should be D1 this year. But if they put it as standard, then you have to see whether the money has come into the account or not. Then asset classification, this is point number 7 is asset classification by the branch and asset classification by the branch auditor. What is your classification? that you have to give. Are there any adverse features pointed out by in relation to asset classification by the RBI and date on which the account was first classified as NPA? That also you have to verify and sanction it. What are the facilities sanctioned? And whether the facility is in consortium facility or not. If consortium, name of the participating banks and who is the lead banker. In case of multiple banking, names of the other banks also you have to give. As a branch classified the facility under the credit rating norms in accordance with the guidelines of the controlling authority. That is, there are two types of rating. One is internal rating and external rating. Up to 5 crores. Internal rating concept they are doing it. If it exceeds 5 crores, then they are doing the external credit rating. And verification of primary security and evidence. What is called as primary security is the security which is created out of loan given. And what about the valuation of those securities? That also you have to see. And whether the insurance policy is there or not, that you have to see. Other thing is point number 17 is whether you have verified the collateral security. So everything we have discussed, but this is with reference to large advances. Normally we have discussed with reference to small advances, but everything is common. Discussion is common. And what about the valuation of a property? Valuation has to be done once in 3 years. And is there any guarantor available to the loan? That also you have to give. The guarantee may be in the form of central government guarantee, state government guarantee, bank guarantee or finance institution. The guarantee is being given by corporate, personal or other guarantee. And if it is there, then what is the date of guarantee, validity of the guarantee and value of the guarantee? And compliance with the terms and conditions of sanction. You have to see whether the terms and conditions have been fulfilled by the party or not. And with reference to primary security and collateral security, you have to give full details. So this annexure, you have to get, you can get, if time permits, if not time permits, after the completion of this work, then I will definitely call you, definitely share this annexure 3 to a mail. And asset coverage, what is the asset coverage? Okay, submission of the stock statement, whether it is quarterly or whether QS statement have been submitted or not. And what is the last inspection of the unit done by the, when the branch has visited the unit at the, what is the last date of the inspection that you have to give? And in case of advance, consortium advances, whether copies of the documents have been executed by the company in favoring the consortium are available. Any other area of non-compliance. Point number 20, key financial factors of the borrowers. So this is a very, very good exercise. This you can find from the process note of the bank. So if you are very well versed in ratios, then you yourself can do it. But it is the duty of the banker. They have to fill it and give to you. And it is your duty to verify and certify. So all these ratios you have to fill. And what is the number of occasions on which the balance has exceeded the DP? That also they have to give. Reasons for excess drawings, that also the manager has to give. Whether the excess drawings were reported to the controlling authorities, that also manager has to give. And what is the debit summation, credit summation, and any adverse commented in the concurrent audit inspection report, and with reference to documentation, with reference to operation, security, guarantee, everything that you have to see here. Just go and see the last line, date, signature and seal of the branch in charge. That means the annexure 3 has to be prepared by the branch manager and he has to submit the same to you for your verification. You have to, I will clearly say that it is not your duty to prepare the annexure 3. It is the duty of the branch manager to prepare all the items that we have seen in this annexure 3 in cases of large advances, in case of large advances or irregular advances or critical advance amounts. So this annexure 3 as per the LFAR has to be prepared only by the branch manager or branch manager in charge and not by you. Your duty is to verify whether the annexure 3 is being properly filled and submitted to you. If you have any contrary view or any different view, you have to cover that point in your audit report. This is what I want to say about the LFAR. This is what I want to say about the LFAR. Now I am stopping the presentation, which I have taken for towards the LFAR. If I have got any doubt, you are welcome and you can put the same thing in the chat box. And please, I'll try to download that 1/4/2022 RBI circular with reference to NPA. I'll forward the same in the meantime to you, to your mail ID. You can download it. I'll download the RBI circular and send to you your mail ID. And if you want, you can download and have a printout. But before going to the audit, please go through the 1/4/2022 IROC circular or master circular, based on which you have to do the NPA classification. Tomorrow I am going to take up the NPA classification. Then now I am stopping the presentation. Please come back by 5 o'clock. That is 7 o'clock in the evening. 7 to 9 we have got another class for the one for the revenue leakage. And if time permits, I'll take the bank guarantee and LC in detail, because that is a very important area wherein we are not concentrated. If time permits, I will take that. Otherwise, I will take the records and registers. Otherwise, I will take the what are the records that you have to see, what are the registers that you have to see, and the evening session, that is after 7 to 9, which I am going to take, is a very interesting area, and it is a very important area that you have to concentrate. Any doubt, you can just call me. You can put it in the chat box. Otherwise, we will reassemble by 7 o'clock in the evening. That is 7 to 9. There is another session today. And the same time, we have to get it tomorrow. But I'll send the link once again, because I have to send another link for tomorrow's login. I'll send the same thing to the mail ID. You have to re-log in. You have to log in that new Zoom contact link. So today's link, it will be over by 9 p.m. By 9 p.m. After that, this link will not be useful. So I'll send a fresh link to you. Tomorrow you can join it. So here, if you got any doubt, you can put it in the chat box. Any doubt, you can put here. And received Jayabalan from Jayabalan sir. Thank you. And anything, any members, they want any information. And please don't forget to come by 7 o'clock. This is going to be another very interesting area. And this is also going to be very important area. Jitendra sir, I think you will drive the car back to your home.
Yeah, I'll go home and join.
So please attend this revenue audit. That's a revenue leakage.
Sure, sir.
Very important area wherein you have to concentrate.
Yes, sir.
And tomorrow is going to be NPA. NPA is based on which you have to do the audit, and definitely it will be useful to you. And thank you very much, friends. And since I have got no doubt to be raised, and if you have any doubt, please take note of it. We will come exactly by 7 p.m. today, and the session will be up to 9 p.m. Or if time permits, even I can extend, but please spare your time. And thank you very much for the effective participation in this session. Thank you. I'm just closing the session. We will come back exactly by 7 p.m. today. Tomorrow is the same time, morning 8 to 11, 2:30 to 5:30, 7 to 9. And last session tomorrow, I'll take only the question and answer session, or if any portion is left, I'll take that period. Thank you very much. And we will come back once again by 7 p.m. today. I'm just closing the presentation.
Thank you, sir.